affecting NVIDIA shares much. Their shares up about nearly 2.5%. And Apple moving to the AI wearables market. It's adding cameras, visual intelligence features to its smartwatches. The way it works, you hold down the camera button, you take a picture of something, and then you have it analyzed by ChatGPT or Google search. The hope is that it helps people learn more about the world around them. There you go. For on-demand news 24 hours a day,
I know all I need to know.
subscribe to Bloomberg News Now. I'm Lisa Mateo. That's your Bloomberg Business
That's
Flash.
why I have my husband. I'll be like, tell me more about this random thing that you know and I don't.
Yes.
All right, thanks so much, Lisa. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Happy rainy Monday in New York. We're broadcasting live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube as well. All right, let's get a check in on the markets. We're obviously seeing a relief rally here. It's definitely a risk-on kind of day. Does it last? What do you do with it? Dana Dioria is Co-Chief Investment Officer at Envestnet, joining us now from Hartford. Dana, is this the kind of day that you sell into rallies, or do you feel like, all right, things are going to go well?
Well, I mean, you know, the obviously the correction that preceded all of this was a lot more sentiment driven, I think, than fundamentals driven. And so, you know, if you're going to be trading on any of these moves in the market, you know, any of the, hey, now we're going to have a lot of tariffs. No, actually, we're cutting back. It's going to be the dirty 15. It's not going to be everybody, et cetera. Then, yeah, this is probably a buying moment. I think for the average person, you know, and the average investor, it's more about what are the fundamentals here? Do we actually think, you know, the kind of the tariff tantrum that we're going through and have been going through and will continue to, you know, in spite of a little bit of positive news on that front, you know, is that something that's going to ultimately lead to broader concerns in the market? And, you know, look, corrections 3/4 of the time don't lead to recessions. But, you know, a lot of it depends on what news is yet to come.
For a world where there is some level of uncertainty, maybe greater than average, is it a way you construct your portfolio? Is it how you allocate your assets, or do you just buy quality and I guess hope for the best?
Yeah, so I mean, look, there's a lot of different ways you can kind of come at this. Certainly, and we sit, you know, Envestnet sits at the junction of a lot of managers, a lot of research services. I mean, certainly you're hearing a lot more international speak, you know. We obviously, I came into this year, I'll be honest with you, we do these chief investment officer panels everywhere. And the idea of US dominance was just, you know, very much a theme at these panels. And, you know, look, markets are cyclical. And certainly the US markets had much higher valuations than international markets. I think you're seeing some repricing of that now. But, you know, the tone has shifted, right? And you're hearing more around, well, hey, maybe international diversification is a good idea in portfolios. We would say that's a long run secular asset allocation need, you know, for most people, right? Unless you're completely focused on US indexes and can't handle the tracking error, we would largely say be diversified in international markets anyway. But we're certainly hearing more now, even from a news and macro perspective, that looking at international, you know, having diversification away from US makes sense.
And do you have to sell something to then buy, or is this like, hey, I had some cash, I'm going to deploy?
Well, you know, that's a great question, because of course we've been living in the last few years with this massive amount of money sitting in cash. And while it's great, you know, we're past these years of financial repression for just savers. We all know that, you know, that kind of the traditional wisdom is, unless it's money you need in the next 3 years, it's probably better served than sitting in cash. So there are certainly people with money on the sidelines who they've missed, you know, a whopping 20+% 2 years in a row from the S&P, for example. And as we all know, you know, it's time in the market, right? If you're missing those big months, years, et cetera, it's really hard to make that back up when you look at the average that you accumulate over time. So look, if you have long run money sitting in cash, for sure, we would say put that into a balanced portfolio. But the other side of the coin is you've also got a lot of people who leaned into stocks, right? Very pro-growth optimism that we started the year, you know, obviously big run up, especially driven by growth. And so you have people who are overweight equities. And if you're overweight equities relative to your risk tolerance and what you can handle, you know, you should be thinking about harvesting from the equity position if you're doing more equity. And you should also be thinking about getting more into fixed income.
Well, in your notes, you've got Bitcoin is no gold. So let me get your thoughts on Bitcoin.
It's Bitcoin is 100% from my perspective a risk-on speculative asset. We read and you're seeing headlines obviously now comparing kind of the performance of Bitcoin and gold. Are these places to kind of hide out? Say again?
Nope.
No, go ahead.
Keep going.
Yeah, so look, are these places to hide out? And we would just very much point out that they are massively different. When people think about a Bitcoin investment, they're not thinking about it A, as a currency, or B, as, certainly, there's an argument that this is another form, it's digital gold. But from the standpoint of the volatility of these assets, there's no comparison. And when you're thinking about Bitcoin, it's really kind of more this asymmetric payoff, the potential for sort of like a lotto-like return. If you want that, that's fine. But thinking that it looks like gold and is going to be a safe haven asset, I think doesn't work.
Okay, so that kind of lined me up for the safe haven part. So all this taking into effect, what's like your best safe haven trade right now?
Certainly fixed income. The standard place to have ballast in the portfolio, I think, makes a lot of sense still. But if you're talking about within equity markets, you started off there, actually, you mentioned quality. There's a couple different ways to go after quality. You can do, traditional quality as a fundamental indicator. You're looking for stocks that, or frankly, ETFs or mutual funds with a bevy of stocks that have high quality earnings, right? So high profitability, not the need to reinvest, plow a lot of money back in, and also probably, cash-based earnings more than accrual-based earnings. So that's one indicator. Another is more a technical indicator, of course, which is just what is the volatility of that stock? And you've got a lot of ways to make that play too. The traditional defensive sort of, you can pick low volatility stocks, or you can pick kind of minimum variance where, the stock itself maybe is not the lowest volatility, but it doesn't correlate well with the rest of the market. So it adds sort of padding to the rest of the portfolio.
That's a really good point. All right, Dana, thanks a lot. We really appreciate it. Dana Dioria, Co-Chief Investment Officer at InvestNet, joining us on the markets. All right, the news of the last 24 hours is that Prime Minister of Canada, Mark Carney, must have Justin Trudeau, how quickly things change. Mark Carney calling an election for April 28th, polls showing a close contest between his Liberal Party and the Conservatives. Joining us now for more is Derek Lecoute, Bloomberg Executive Editor for Canada. Hey, Derek, can you just walk us through what a snap election in Canada looks like?
Yeah, it's a really short election compared with what American listeners might be used to. It's only 5 weeks, so we'll vote on April the 28th, and it's really a two-horse race. Although there are multiple parties represented in Canada's Parliament, this really comes down to Mark Carney and the Liberal Party, which was also the party of Justin Trudeau. They've been in power for almost 10 years. And the Conservatives, led by a guy named Pierre Poilievre, who was a cabinet minister back in the day of the previous Conservative government of Stephen Harper, a very experienced politician, very economically focused, and it's going to be a very tough fight with the trade war and with Donald Trump's comments about the 51st state, kind of right in the middle of the discussion.
So that's kind of where I wanted to go. How is the relationship between Canada and the U.S. kind of impacting each of these candidates here? Do they have differing views? How do they approach it?
So it's become, according to certain polling, the number one issue in this election, the relationship between Canada and the U.S. for obvious reasons. It's important economically, but it's also because of the 51st state comment, kind of become this Canadian identity discussion. Now, polls suggest that the Liberals sort of have the advantage on that. They are seen as less ideologically aligned with the Trump administration. There are more members of the Conservative Party who kind of like Trump, and the Liberals and Mark Carney are trying to, politically make the most of that. They've run an attack ad, for example, against the Conservative leader, showing him using phrases like fake news and radical leftists, things that Donald Trump likes to say or has said, and that's a hurdle for the Conservatives to overcome. The Conservative leader has changed his motto. The motto of the campaign is now Canada First, and he's making a point of going out there and saying, "Look, I am not Donald Trump. I'm not a friend of Donald Trump. I'm for Canada, and here's how I would make Canada stronger." So it's really shaped the whole debate.
Well, to that point, what's the election about today versus what it might have been about 8 months ago?
8 months ago would have been completely different. Even 5 months ago, I think that the key issues would have been housing, inflation, cost of living, the sort of economic squeeze, not dissimilar to some of the issues that bedeviled Kamala Harris and Joe Biden before her. There plenty of anger about the spike in inflation and the difficulty of living in certain Canadian cities from a cost point of view. And the Conservatives had at one point, according to some polls, a 25-point lead going back, because they had done a really good job of communicating what they would do about these issues. And they have a platform for housing, and they have a platform for taxes that they're talking about today. It's just that those issues are not quite at the center of the discussion in the way that they were.
Derek, just 30 seconds left. Can you kind of characterize how Canadians, the average Canadian on the street, views the U.S. right now?
Somebody that we spoke to for a story that we published on the weekend said that there is a profound sense of betrayal in Canada about the United States, and I think that that's accurate. I think there's a sense of bewilderment and frustration about the whole thing, and the country's in a mood that I cannot say I've ever seen before, and I'm over 50 years old, so it's very different, and it's just because of the rhetoric that's been coming out of the White House primarily.
All right, Derek, thank you so much. We appreciate that. Derek D. Clouet, he is executive editor for Canada for Bloomberg News, calling in from our Toronto bureau here. I mean, I guess my natural reflex is to say, does the average Canadian know that it's more reflection of the administration versus the average American? But I'm not sure I can say that. I think I can say that, but
I have absolutely 100% no idea.
Yeah.
Or is it just person by person at this point?
I never even thought about it in those terms, other than there are friends to the north. Why? I don't know. But anyway, that's the world we're in. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks advancing. Signs that the next round of President Trump's tariffs may not be as intense as previously expected. We'll start with the NASDAQ, up nearly 2%, 341 points. The S&P 500 up almost 1.5%, 83 points. And the Dow up more than 1%, 513 points. We have the two-year yield, 4.02%, up 6 basis points. The yield on the 10-year, 4.32%, and that's up 7 basis points. The Bloomberg Dollar Spot Index is little change. We have Bitcoin up, wow, more than 3.5% at just over 88,000. Few companies making news. Private equity firm Clear Lake Capital Group. They're agreed to acquire data and analytics provider Dun & Bradstreet. It's a deal that values the company at $4.1 billion. We have Dun & Bradstreet up nearly 3%. Then you have building materials company James Hardie taking a hit, down about 14% in Sydney after it agreed to buy Chicago-based AZEK in an $8.75 billion cash and stock deal. AZEK, though, is up nearly 14%. And from deal making to entertainment, we have shares of Disney down about 0.2%. It's Snow White. It topped the weekend box office in the U.S. and Canada, made about $43 million, but it was less than expected. The remake actually cost at least $250 million to create. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa. Alex Steele here alongside Paul Sweeney, and that's Snow White. Huge controversy. Oh, my goodness.
Did you see it?
Did not see it.
Oh, okay.
Full disclosure, I never liked that cartoon.
No. Okay.
Too scary?
What was the controversy?
Too
How can you have a
stupid.
controversy about How can you have a controversy about Snow White?
Dude.
Oh.
Just Google it.
Oh,
There was
Google
a
it.
lot.
Women's rights.
There were
Okay.
a lot of layers. There was
Okay.
all about the 7 dwarfs, too, and then the whole women's rights thing. It was a lot that
Okay.
went down.
That's a rabbit hole, sounds like.
Anyway, big rabbit hole. Okay, Alex Steele, Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. And every day we really like to delve into the Bloomberg Big Take story of the day. It is a deeper dive, as I just said, into the main issues of our time. And this one really centers around Jay Clayton. And after steering Apollo out of all the turmoil associated with Jeffrey Epstein, he's now going to be the crown jewel of the DOJ. Wanted to get more on this with Ava Benny Morrison, legal reporter for Bloomberg News. First, just paint the picture of Jay Clayton and his career.
Sure. So he has a pretty impressive resume. He has been a long-time senior counsel at Sullivan & Cromwell, a white shoe firm, primarily based in New York. He was the chair of the Securities and Exchange Commission under the first Trump administration. And most recently, he has been the chair of Apollo. He was brought into that position at the Investing House to help clean up and get things back in order after the Jeffrey Epstein scandal. And now he is going into one of the most premier seats in American law, which is the U.S. Attorney for the Southern District of New York, also known as the Sheriff of Wall Street.
So first we have the red headline crossing the Bloomberg terminal. President Trump, this is according to President Trump and social media, 25% secondary tariff for nations buying Venezuelan oil. So that is the latest headline coming out of the White House. We'll have more reporting on that going forward. So Ava, talk to us about the Southern District of New York. Historically, a very powerful office here, fiercely defending its independence, but arguably it's come under some pressure recently, most recently with the Mayor Adams case here. What's that angle to the story?
Absolutely. So the Southern District of New York has a nickname of the Sovereign District because it really prizes its autonomy from Washington and sees itself as a kind of independent institution. It chases really big headline-grabbing cases on Wall Street, in politics, in terrorism. So it's really prized itself as being independent, but that came under threat recently when after Inauguration Day, Washington, D.C., some of the senior officials at the Department of Justice there asked the Southern District to drop the charges against New York Mayor Eric Adams. And that was quite controversial. It led to a string of resignations, including by the acting boss at the time, a seasoned prosecutor named Danielle Sassoon. She refused to comply with that order to drop the case and resigned instead. That set off a number of other departures. So the office has been in a bit of a tenuous situation. There has been some turmoil there, and Jay Clayton is really coming in at an interesting time. One of the big questions is, how will he manage that relationship with the Trump administration?
And aside from that relationship, like what will be on his docket regardless? You know, you mentioned the Eric Adams case, but like what would we expect him to do as head of this area?
So we've gotten a bit of an insight into the kind of priorities he has going into the role from interviewing more than 30 people who know Clayton and who have had conversations with other SDNY prosecutors. We know that he's particularly interested in focusing on human trafficking, on college campus protests, on anti-Semitism, and also targeting how bad people finance themselves, so money laundering. That's, you know, kind of in line with what SDNY has done traditionally. You know, here at Bloomberg, we know them as the office that prosecutes big white collar cases like FTX and Archegos. But some of these priorities certainly echo the kind of priorities that President Donald Trump has spoken about since Inauguration Day too.
So do we know anything about his relationship with President Trump? Because oftentimes that ends up being a critical issue.
Yes, he has quite a close relationship with Donald Trump. From the people that we've spoken to, it's not something that he boasts about, but the two are close golfing buddies. They're both very good golfers. He was in line for the SDNY role actually during the first Trump administration after he was chair of the SEC, but that didn't work out. Jay Clayton is well regarded in the New York circles that Trump seeks out and seeks advice from as well. So he's going in there with that particularly close relationship. And from the conversations that we've had with people around Clayton, he certainly thinks that the president will, and the president's allies and people around him will listen to him and will let him get on with the job that he has to do there. Whether that turns out to be the case is something that we'll have to watch and see.
What are the criticisms surrounding Jay Clayton?
One of the big criticisms is that he has never been a federal prosecutor before, which is extremely unusual for someone going in as the boss of SDNY. Most of the people who have occupied that position have, in fact, been federal prosecutors, specifically in that office. So that was a big criticism the first time around in 2020. It has been brought up again, but to a lesser degree. When he was first nominated by President Donald Trump late last year, there was a sense of relief, certainly within the office, that this was someone who has a good reputation in legal circles in New York, and he's worked in government before. He's worked at the SEC, he's a known quantity, and there was a sense of comfort with his nomination.
So does he have an agenda right here? An agenda just meaning a to-do list here that's front and center?
He does. As I was saying before, we've got a bit of a sense of what he's going in with and what he wants to focus on, and that involves human trafficking, a crackdown on college campus protests, and anti-Semitism. He's been vocal about some of these things in the past and has expressed, disappointment that the government hasn't done a whole lot, in his view, to crack down on college campus protests. So we expect to see those areas focused on, but also white collar work. This is the kind of work that makes that office so famous. And there is a sense from him that he doesn't really need to encourage people to go and chase those big cases. They will just happen regardless, given that the office is essentially in charge of policing Wall Street.
All right, Ava, thank you so much. We appreciate that. Ava Benny Morrison, legal reporter for Bloomberg News. Talking about the big take story here on the Bloomberg Terminal. We always love the big take stories because really interesting topics they tackle, and then Bloomberg News allocates the resources to really dig deep and get some great reporting. You can read more of this story on the Bloomberg Terminal and at bloomberg.com/bigtake. Markets continue to move higher here, holding on to earlier gains. S&P 500 is up about 90 points. That's 1.6%. The Dow up 535 points, up 1.3%. And the NASDAQ up 367 points. That's 2.1%. So big moves in the equity markets. Big move higher in yields as well. The 10-year Treasury is up 8 basis points, 4.1%. 0.32%. We're going to have more coming up. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, a strong move higher today in the markets. We'll keep an eye on that for sure. Sam Fazeli joins us, Director of Research for Global Industries. He's a Senior Pharmaceuticals Analyst for Bloomberg Intelligence in London. Sam, I'm seeing some deals happen in your space. And again, every Monday we come in, it seems like there's something new. But I see Novo signs a $2 billion deal with United Labs for obesity drug. Is that where a lot of the money today is going, chasing this market?
Hi, Paul. Yes, so as you know, obesity is hot, and there's been quite a few deals in there. I think last week we talked about the deal between Roche and Zealand Pharmaceuticals. And this week, as you rightly said, we have the one between Novo Nordisk, and this time a Chinese biotech company. And it's an asset that continues to broaden their portfolio of the X number of mechanisms of action to try and hit this, big issue, frankly, right?
Right.
So, and it's an interesting deal. I mean, it's China for a start, and it's interesting because I've seen others. AstraZeneca only last week said they're putting $2.5 billion investment into a research center in China last week. And today we had this deal, $200 million up front, $1.8 billion, what we call bio-dollars to come.
Bio-dollars?
So
what's a
very
bio-dollar?
Bio-dollars. But bio-dollars are the sorts of dollars that you and I would like to have for real, except they're not real. I.e., if this works and that works and that works, you get another 100. And then that, you get another 200. So when biotech companies love it, they add it all up and say, look how big our deal is. Actually, up front's only 200. Although I wouldn't mind $200 million either.
I mean, wouldn't turn it away.
Exactly.
Yeah.
No.
So what's the big question or big discussion you have with your clients these days, Sam?
Yeah, I mean, there is a. So as you know, Paul, we have these anonymous chats with different industry investors, and we have one for the drug sector, and of course, there's a huge amount of. Can I call it depression? Yes, I think we can. As regards the public biotech markets, it's been 5 years. If you look at the XBI, which is an ETF that tracks the biotechs that are listed on the S&P 500, it's gone nowhere pretty much for 5 years. And if you want to really depress yourself, plot that against the S&P 500. And we all know where that's gone, irrespective of the latest little down. So that's where biotech investors are a bit sad. On the other hand, we're seeing some deals with private biotechs that are nowhere near the sort of valuations they would get in the public markets. So it actually starts to question, why would they want to go public if they can get these sort of returns by doing a deal with AstraZeneca, a deal with Sanofi to get $400 million upfront for a very early stage asset. So that was quite interesting. That was a couple that came last week.
And you're coming to the U.S. next week, aren't you? Did I remember this correctly?
I am. You can beat me up in the actual
Radio
studio. Yeah.
Very much
the
looking
real
forward
one.
to it. Where are we with measles?
Oh, yeah, well, the cases are continuing to rise. No more deaths, thank God, that there's no more misery from that angle, but the disease is still there. I think a lot of people that I speak to are convinced that we're only looking at the tip of the iceberg when you look at the count. But we are slowly going through the respiratory season. COVID's on its way down, flu is on its way down, RSV on its way down. Hopefully measles will be the same case, and that we'll come out of this without too much collateral damage, which is a horrible thing to call it, without too much misery for people who suffer from it.
Sam, as you well know, there's been a growing skepticism regarding vaccinations in general here in the United States. How is it in the rest of the world, the rest of the Western world, I'd say?
I mean, Paul, remember, the author of the paper that is now been disgraced and disqualified, or whatever the right phrase is, removed from the scientific conscience for linking MMR vaccines to autism was a British scientist or medic. But whether you want to qualify them as scientists or not is a different matter. And so there's been, the story of vaccine skepticism has been here too. It's just a little bit different because it's very easy. It's all free. It's available to anybody who wants it. It's available on the NHS. You walk into your doctor and you get it. So you don't have to pay anything. And therefore, vaccination compliance, particularly in the older cohort of folks, is better here.
Oh, okay, that's interesting. But then when you take a look at the broader, at the broader landscape and just the vitriol still into the MNR vaccines in general, like not just for measles, but just in general, does this really hurt innovation? Does it hurt the private sector's willingness to pump money into all these things?
Well, I mean, the United States is one of the biggest pharmaceutical markets, but they're not the only one. And at the end of the day, one has to assume that good data and good science will prevail, whether it's an mRNA vaccine or not. Maybe it's necessary to do some studies to prove that mRNA vaccines are not changing your genome. That's not very difficult to do if the intent is there. Maybe the CDC should do that. But in general, mRNA vaccines, normal vaccines, or standard type vaccines, they're all here to stay as far as I'm concerned. And you wait. I hope we don't ever have to deal with another pandemic. See who gets the first orders for a vaccine.
Yeah.
It will be the mRNA folks.
Yep.
Totally.
Yep.
Please don't say that, though, out loud to people. All right, Sam, really great stuff. We will see you here in studio next Monday. Feel free to bring some wine over also from your winery, just putting it out there. Sam Pastelli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals. Okay, for our listeners in the U.S., here is a reminder. You can listen to us via satellite radio on SiriusXM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now, with the market continuing on its rally with the S&P up 1.6%.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great show lined up for you. Going to dissect all the market-making news of the day. Eric Wasson, a Bloomberg congressional reporter, will be joining us as the stage shifts from tariffs to tax cuts, what that actually looks like. Roz Matheson, Bloomberg News Director for Europe, will also be breaking everything down between peace talks between Russia, the U.S., and Ukraine. Then RJ Gallo, Senior Portfolio Manager, Fixed Income at Federated Hermes, will be joining us on the fixed income space. We get some 2 5s and 7s auctions coming out. It's going to be key. Paul's not at all pumped. And then, of course, we will also talk about BYD crushing competitors with that 5-minute charging system, really taking some share. We'll break that down as well. But let's kick it all off for you with a Bloomberg Business Flash with Charlie Pellet.
Right, thank you very much. And here's what's going on this Back to Work Monday. We have got the Dow, the S&P, NASDAQ all ripping higher. Russell 2000 index now up by 2.1%. Bottom line here, stocks kicking off the week with solid gains. The S&P up 89, just about the best level of the day, up 1.6%. The Dow up 526, now up 1.2%. NASDAQ up 359, up 2%. And to keep it all in context, S&P up by 1.6%. 10-year 4.31%, the 2-year 4.02%. Gold now down $13 the ounce, holding above 3,008. Spot gold right now lower by 0.5%. Bitcoin up 3.2%. Bitcoin surging to 87,826. As for the economic backdrop, Callie Cox is Chief Market Strategist at Ritholtz Wealth Management. She says you got to keep an eye on employment.
It's really hard to have a recession unless the consumer stops spending. And when Americans are making money, they're spending money. I'm worried about where the job market could go from here. We've seen layoffs across the government. We've seen less hiring support because now government's out of the equation. American companies are under a lot of stress.
Callie Cox of Ritholtz Wealth Management interviewed this morning on surveillance. BYD sales last year surpassed the $100 billion mark, leapfrogging Elon Musk's Tesla on revenue as the Chinese auto giant wows consumers with a range of electric and hybrid cars packed with high-tech features. We've got more on BYD and Tesla coming up in a moment right here on Bloomberg Intelligence. President Trump says he will be seeking a 25% tariff on any nation buying oil and gas from Venezuela, citing migration and criminal gang members in the United States. Also, programming note coming up 1:45 Wall Street time. Our Michael McKee will be sitting down with Atlanta Fed President Raphael Bostic, recapping S&P up now by 1.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live, and that's where you find it. Right now, it's time for Market Drivers, stocks on the move, and companies to watch with Bailey Lipschultz, Bloomberg News Senior Equities Reporter. Bailey, what do you got for us?
All right, Charlie mentioned BYD. We talked about it. Earnings really strong from the Chinese EV and hybrid maker, but want to call out the strength we're seeing right now in Tesla. Shares up more than 9%, best performer in the S&P 500, second biggest driver in terms of points for the S&P 500. Not really a big news peg other than maybe some read across for either optimism on the EV space or really just people wanting to buy the dip because the stock is down about 33% year to date. But we are certainly seeing and have been tracking retail and individual investors buying the dip or buying the sell-off, if you will, 4-day rally for that company. And again, we're seeing pretty strong volumes, and that's really been the big driver of equities higher this morning.
Yeah, also, not just that, some of it is fundamental. Fannie Mae, that stock is up about over 9%. Again, we're in this privatization kick, right, with Fannie Mae and Freddie Mac?
We're back. Both stocks trade in the pink sheets, so you got to keep in mind that this is still government held, but there's a risky asset. So both shares up more than 8%, as you mentioned. Fannie Mae trades under the ticker FNMA, Freddie Mac, FMCC. Both stocks up more than 270% in the last 12 months, really betting on potential privatization. The latest rally today coming after the Wall Street Journal reported that Federal Housing Finance Agency Director Bill Pulte, as well as Treasury Secretary Scott Bessent, talking about privatization efforts, what it could mean for these companies as well as the U.S. consumer. Big question is, how does this actually get done? What does that path look like? And one word of caution for investors, when I talk to bankers and lawyers that operate in the ECM space, there's a lot of uncertainty around what the pink sheets actually would be worth in an IPO. So certainly something to keep an eye on, but we've been using that as a gauge of sentiment, and an 8% move is nothing to bat an eye against.
What about MicroStrategy?
The Bitcoin proxy company announcing that it bought about $584 million of Bitcoin. The stock does trade pretty much wherever Bitcoin does. Bitcoin right now up about 3.4%. MSTR shares up more than 6%. This comes after the company sold a so-called perpetual strife preferred stock last week. Ooh. That is really jargony, but basically the way to bet on it is they sold shares that pay out a 10% dividend in hopes that you eventually just get your money back. So there's actually no conversion for the stock. There's actually no strike price. It's not like a normal debt instrument. So Michael Saylor and MicroStrategy pulling every lever they can to continue buying Bitcoin. Again, buying about $584 million last week.
That is such a great story.
It is the gift that keeps on giving. And again, when you talk to people around the deal, perpetual strife preferred stock sale, even they were kind of like, yeah, good luck explaining that.
I mean, I've sold some crazy things in the past. I don't think I could ever come up, but you always have that one person in the back of the room saying, yeah, I've got an idea.
Yeah.
You know,
Well,
But it keeps working. People still keep buying
yes.
stuff.
And as long as you price it well, so the stated value $100 carries a 10% coupon, but they actually price it at $85. So your options are either to turn that, call it 11.7% coupon, into a solid investment with some pretty darn high risk, or to play the greater fool theory and find someone else to sell it
I'm
to.
surprised my guy Tony hasn't called me up and says, I got something for you.
Because he knows you would just laugh in his face.
I don't know. Some of the stuff we've been putting in there the last couple of years, kind of crazy. All right, very good. Billy Lipschultz, there's stocks on the move. We appreciate that. It is time now to start talking about center stage is going to be taken now by Trump's tax bill. That's always the tough stuff. Whenever we talk to folks down in D.C., they say, okay, you can talk all you want. You can, talk about this policy, that policy, but at the end of the day, you got to pay for it, and that's when Congress comes into play. Eric Wasson, congressional reporter for Bloomberg News, joins us in Washington, D.C. Massive tax bill package. They love to get something, the congressional Republicans, to the president's desk. Where are we in those discussions, Eric?
Yeah, they've really dragged on for months here. If you'll remember, or your listeners will remember, there was a one bill versus two bill debate where they were going to quickly pass a budget that just plussed up the border, and then dealt with tax later in the year. The House kind of won that argument, saying that they're going to just do one big, beautiful bill, a giant bill that does have the border adjustment, but also has taxes and spending cuts. The House last month passed a bill, is $4.5 trillion in tax cuts, partially paid for with about $2 trillion in spending cuts over 10 years. But the Senate's looking to go much bigger. And in fact, they're contemplating basically a counting gimmick to consider $4 trillion extension of the Trump tax cuts as free as its current policy. I can get into the mechanics of that. And that would allow them to add potentially trillions more in cuts that the president's asked for. No tax on tip, overtime, Social Security benefits, car payments, eliminating the estate taxes on there. Of course, there's the SALT fix that some members are advocating. So they're still kind of locked in trying to figure out how to get something that both the House and the Senate can pass. And I was just confirming that the Treasury Secretary and Kevin Hassett are going to meet with top Republicans tomorrow to try to break up this logjam.
So to that point, the sequencing has always been key for the Trump agenda, right? And last administration for President Trump, it was the good stuff first and then tariffs coming after. This time it's tariff first and then supposedly the good stuff like deregulation and tax cuts coming after. What's the timeline for this?
A lot of it's actually driven by the debt ceiling. The House bill, the House approach would put a $4 trillion debt ceiling increase in with this mix. This is because the budget process can be used to bypass Democrats. Things that were originally designed to reduce the deficit, you could do just with, just 50 votes in the Senate. So the debt ceiling timing is now looking like July to September, according to the Bipartisan Policy Center. We'll have a CBO, Congressional Budget Office, more official sounding estimate this week. if they're going to put this in the package, that lights a little bit of fire to get this done by July. They really don't want to risk a payment default. If they try to go the bipartisan route, looking at Schumer having rolled over on the stopgap spending bill 2 weeks ago, maybe they can get him to roll over on the debt ceiling without making too much concessions. That could divorce the two issues, and they could take longer on the tax. There's a couple of deadlines, and really the business community doesn't want to see what happened in 2017, which was that the tax bill got passed very close to the end of the year. They didn't have a lot of time to plan for it or make the investments, for example, that bonus depreciation or other business tax breaks would encourage. So they're really urging Congress to try to get this done as soon as possible. The Speaker of the House says by Memorial Day, but I think a lot of people feel like that's overly ambitious.
What are some of the offsets that are being discussed out there that would maybe make this thing work?
Yeah, so that's the big question. The House has $2 trillion in cuts that the House is contemplating would fall heavily on Medicaid, food stamps, Pell Grants. There's definitely going to be some losers there. The question is, who would Medicaid? A lot of people are talking about block granting it to the states. So states would have to either make up the deficit and raise taxes on citizens there, or sort of scale back the program. There's also things on the tax side, carried interest loophole closing. They're talking about an endowments tax, taxes on merit scholarships. This is all part of the Trump sort of targeting universities, which he isn't particularly happy with. And then there's also the issue of corporate SALT. If they're going to raise the $10,000 limit on the state and local tax deduction for individuals, maybe eliminating the marriage penalty, there's talk about paying for that by limiting the ability of corporations to deduct their state and local taxes. So there are going to be winners and losers in this bill for sure. We're watching really closely.
All right, Eric, thanks a lot. Really appreciate it. Eric Watson is Bloomberg congressional reporter. Great stuff coming there from D.C. The other wild card in the Trump administration is how the talks unfold when it comes to peace between Russia and Ukraine. Apparently, U.S. and Russian officials are meeting in Saudi Arabia to discuss a potential ceasefire in the war. And this, of course, follows talks between the American and Ukrainian teams. Joining us now is Roz Matheson, Bloomberg News Director for Europe, the Middle East, and Africa. Roz, what do you know in terms of where the talks are?
Well, as you were saying, we had talks initially between the US and Ukraine officials in Saudi Arabia. Now we've got talks that have been going on today between the US and Russia, and they seem to be really granular and quite technical in nature, focused on some specifics around perhaps getting agreement for ceasefire on maritime traffic in the Black Sea. For example, we're not getting a lot of readouts at the moment from those conversations, so they seem to have gone into a bit of a quiet phase on it, at least with each other. But the sense is they're going bit by bit in this idea of a ceasefire in Ukraine. We had that conversation initially around a ceasefire for not hitting each other's energy infrastructure, even though attacks seemingly are still going on in the minute. And now we've got conversations around how to get guarantees around traffic, maritime traffic in the Black Sea. But the big one, of course, is what to do where people are actually fighting along the line of contact, which is a very long line on the side of Ukraine, and what to do there in terms of bringing the fighting to a halt. There doesn't seem to be any particular developments on that front so far. So the message really that we're getting is that even though the US president clearly wants a very quick ceasefire here, that there's a lot of steps that need to happen and a lot of complexity along the way.
And Roz, as you point out, the U.S. administration certainly hopes for a Ukraine peace deal, but it doesn't seem like Vladimir Putin is in any hurry here. What do we know about his thinking?
Well, that's right. I mean, obviously, he's willing to have conversations and perhaps even a direct meeting with the US president, with Donald Trump at some point in the near future, perhaps in a place like Saudi Arabia again. But he's made it really clear, and that's by our own reporting and our own sourcing as well, is that he's got maximalist demands here and he's not going to shave those down in any great hurry. These are things that he says that he insists need to happen for there to be a ceasefire moving towards a more permanent deal. And those are essentially red lines that are not that great for Ukraine in all of this, in terms of his territorial demands to make sure that Ukraine can never join NATO, for example, to really, fence Ukraine in, and whether those are just demands that he gets traction on with Donald Trump. and the US in the end that are detrimental to Ukraine. So he's not in any great hurry here to get to a ceasefire, a final deal. He's obviously open to talking, but the position from Russia has been very clear. They've got demands and they want them met.
What about Europe? Where's Europe right now during these conversations?
Still trying to get in the door, it seems, in the conversation in a fulsome way, at least. I mean, obviously, we've had a lot of meetings that have gone on just at the EU level lately, including last week, and EU leaders are having another call. And this week, we know that, again, the UK Prime Minister, rather, talked with Donald Trump yet again. So a lot of conversations going on, and the message from Europe is we need to be part of the discussion around a ceasefire, and Ukraine's interests need to be represented. But it's very clear that they're struggling to get a seat at the table, and that Donald Trump is not particularly interested in giving them one at the table, let alone giving Ukraine a proper seat at the table. And so for Europe, the challenge is getting their voices heard, or showing that they're there and able to pick up some of the slack potentially in supporting Ukraine.
Roz, is there any sense of timing when this could come together? Is there any consensus building out there?
Well, it's very hard to say because, again, these talks that are going on at the moment seem to have been very technical in nature and very specific around details. So are we getting the little pieces of the chessboard towards a bigger ceasefire at some point? I imagine the key thing is whether there's an agreement to have further rounds of talks within a matter of days, or at least towards the end of this week. And at what point can that build to a direct meeting between Vladimir Putin and Donald Trump, possibly as soon as next month? I mean, obviously, Donald Trump keeps saying Easter as a timeline. He wants something by Easter, but what exactly he would be happy to get by Easter? Is it a partial ceasefire, again, around energy, or perhaps maritime traffic in the Black Sea as a springboard to something else? So we're unlikely to get a full-throated ceasefire either way, at least in the next couple of weeks.
All right, Roz, thanks a lot. We really appreciate it. Roz Matheson joining us on the talks between Russia and the U.S. on Ukraine. All right, some breaking news for you. Xiaomi is said to raise about $5.5 billion in upsized share placement. They were selling about 800 million shares. Now, Xiaomi was kicking off a share sale in part to raise funds for its EV business. The fundraising expected to be a long-term positive for the company, but many saying that it may pressure shares in the short term due to, shocker, dilution.
And the stock is up 65% year to date and 285% on a trailing 12-month basis. Even I know that's a good time to sell stock.
There it is, and they take your point. All right, coming up, RJ Gallo, Senior Portfolio Manager, Fixed Income at Federate Hermes, will be joining us. On the fixed income space, we get 2 5s and 10s later on this week. A lot of supply coming online there. And we'll discuss what's happening with BYD and why they're just crushing Tesla over in Asia. This is Bloomberg Intelligence. Happy Monday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. A Monday rally underway, and right now the Dow Jones Industrial Average is unchanged on the year. Briefly, a couple of seconds ago, it was positive, but right now flat on the year. Looking at a gain in the Dow, 558 points, up 1.3%. The S&P up 93. The S&P 500 index now higher by 1.6%, and we have got NASDAQ up 372, up 2.1%. Stocks are getting a tech lift as bonds fall on tariff signs. The 10-year 4.32%, with the 2-year 4.02%. Gold down $11 the ounce, down 0.4%, 3,011. And West Texas Intermediate crude oil up 1%, 68.96 for a barrel of WTI. United Airlines will begin charging customers more to access its airport lounges to help combat a rise in overcrowding since the pandemic. The carrier also says individual United Club memberships will now cost $750 a year for Mileage Plus loyalty program members. Previously, United Club annual fees peaked at $650. Airline stocks, they're all flying higher today. Right now, we've got United up 6.6%, Delta up 5.4%, and American up by 4.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live, and that's kind of where we are here. I think the market continues to grapple with trying to get a handle on what the economic outlook is going to look like for this economy going forward, given a changing tariff policy coming out of Washington, D.C., which may result in inflation, which may result in slower economic growth. Today is certainly a risk-on day, as Charlie was just reporting. Let's check in on the bond side as well. RJ Gallo, he's a senior portfolio manager, fixed income at Federated Hermes. He joins us today. Hey, RJ, if you look at your bond portfolios, how have they been kind of reacting over the past couple of months to what has been, kind of an uncertain outlook for this economy?
Well, you started off the year with, I would say, sort of the Trump trade, optimism in markets, broadly speaking. There was an expectation that equities were going to experience a tailwind from deregulation. I think the market had maybe deceived itself into believing that the threat of tariffs wasn't as extreme. Many had felt that tariffs represented a negotiating tool, not necessarily something that we were going to experience. As the years unfolded, the tariff threat has become more significant. I think the market has been disabused of its notion that tariffs were just a negotiating tool. They have other uses as well, and the Trump administration seems pretty focused on putting in some new tariffs, and they already have. And there's probably more to come. With that, the expectation of tailwind for stocks switched to a headwind. We had a bit of a correction there. And the underlying economy is now expected to experience, and is already probably experiencing, some of the challenges with tariffs. Tariffs are a tax. You put a tax on something, you get less of it. So you get less imports and you get less economic activity, globally speaking. And all that uncertainty around tariffs, I think, has started to erode a consumer sentiment, and that too is becoming a risk to the outlook. We're not calling for a recession, but no one was calling for a recession after the election, and now plenty of people are talking about it. So you have to at least acknowledge the probability of one seems to have risen as we face the uncertainties ahead about policy on both trade and fiscal sides.
If you're not yet focusing or forecasting a recession, how about stagflation, where you just kind of get slowing growth, higher inflation on the margins, and nobody likes that, do they?
Absolutely. I mean, it's interesting to me. So it became very clear from the first tweet or truth or whatever you want to call the messaging of the day about tariffs from President Trump, that the markets were going to treat tariffs as a greater growth headwind and less of an inflationary concern. Since then, we've seen even the Fed, Chair Powell last week, basically say that the inflationary implications of tariffs are temporary or transitory. That word is back. And that the growth concerns ultimately will dominate relative to the inflation concerns. So stagflation is a challenge if you're going to see the price level go up once because of broad-based tariffs, and you're going to see economic activity slow down. There's your stagflation. But it appears that the markets and the Fed will look through the inflation consequences and focus on the growth. And that suggests that the Fed will be easing, as we saw in their summary of economic projections. All this has been friendly to the bond market. If you look on a year-to-date basis, the universal, aggregate, and treasury indices are all up 2.5 to 2.6%. That's pretty good run in a relatively short period. We haven't even finished the first quarter. And that's because yields have come down given the growth concerns that are manifest around the prospect of trade confrontation in a broader sense.
So where do you think we see the most volatility on the curve then? Is it going to be in the long end because we have those growth concerns, maybe over inflation terms, or the front end because policy is going to have to react to whatever policies are set out of DC?
So within our broader fixed income framework here at Federated Hermes, we focus on duration, we focus on curve, we focus on allocation across the array of fixed income sectors, and we'll throw some currency in when portfolios can go overseas as well. So our process goes along those broad lines. Duration, we're leaning a little bit long. We think a test of 4% seems a little more likely than not. It's not an aggressive long, but we're leaning a little long. On yield curve, we're in a steepener. So that would suggest, the answer to your question, Alex, is that we think there'll be more delta, a bigger change in yields on the shorter end of the curve as the Fed ultimately needs to react to the slowing economic situation. Meanwhile, the inflation concerns are still a little bit out there. Everybody seems to believe that the consequences of tariffs are temporary from the inflation standpoint, but when you still have a low unemployment rate and the Fed is easing, maybe the inflation concerns will still bubble there, and you would suggest that would be a steepener. So lower yields on Fed, but inflation concerns lingering should steepen out the curve.
RJ, have you and your teams, have you altered your credit kind of, risk tolerance over the past couple of months at all?
We've been cautious on credit for a while, and to be frank, it hasn't been successful. Certainly wasn't in 2024. Why? Well, because spreads, the relative value of credit risks, both investment grade, corporate, and high yield, spreads very, very tight. In a sense, you're not being compensated for taking the risk. It was almost like they were priced for perfection. I know that's a bit of a overused phrase, but it really did apply. We've seen a bit of a hiccup in spreads since then. We haven't reversed our views. We still think that a slowing economic backdrop, relatively tight spreads despite some cheapening, all suggest that the better trade is to be a little underweight credit. So where are we putting that money? We've been overweight mortgage-backed securities pretty substantially. We think relative value favors them. We've also been a little overweight treasuries, which has been helpful on a year-to-date basis. We've seen yields come down a good bit because of the macro story we were just discussing. And we also, in other sectors that are sort of out of the index, we have a decent allocation into short-term, short-duration, credit-focused trade finance, which we think is holding up well. And trade will still be happening, and trade finance will still take place, even if you have some tariffs. And you don't have the kind of spread duration in trade finance. It's relatively short-term.
Going back to credit spreads for a second, is there any indication that the money that we saw go into European assets or to basically countries that have fiscal stimulus coming now, can any of that money come out of credit?
It may be happening. I don't know if we have clear data on the fact. I mean, I do think it's interesting that, we ended last year with exceptionalism, American exceptionalism, and, which struck me as a little odd. The U.S. markets had outperformed on the equity side, and it was expected to just be off to the races, in 2025. And then we started seeing that the policy uncertainty in the United States to include, it's one thing to say you want to shrink the government. It's another thing to do it in a way that might be not only disruptive, but also potentially reckless. If it's going to interrupt payment flows to people who are getting services from the government, if it's going to undermine consumer sentiment and help to become a headwind to overall economic performance, you have to question the broader how the policies are being implemented. You can try to shrink the government, but you can do it in a way that might not be as disruptive as it's been. So we've seen a disruptive DOGE process. Again, I don't argue that the government shouldn't be shrunk. It should be, but there's probably a more careful way of doing it. They must think that that wouldn't work. I would suggest that history suggests otherwise. You saw it in the Clinton-Gore administration. They shrunk the government with much less disruption. So you've had a disruptive set of policies. You've had a slower growth trajectory on the tariff uncertainty, and that suggests that spreads should be widening. And it's not surprising to me that there's been some reallocation of capital outside of the U.S. because we have been a source of uncertainty in this country.
Yep. RJ, thank you so much. As always, RJ Gallo, Senior Portfolio Manager, Fixed Income for Federated Hermes. Let's switch over to the EV business. Interesting story out there that's really been rocking, I think, the EV business. That's BYD, saying they're going to have a 5-minute charging system. That is a game changer, if that is in fact the case. Let's check in with the BNEF folks here. BNEF, they cover all the energy industry head to toe. Alex is beat, but they've got all the data, all the analysis. Great stuff. Ryan Fisher joins us, Bloomberg BNEF EV charging team leader. So, Ryan, talk to us about this BYD story as it relates to this fast charger.
Yeah, I mean, this has just come out of nowhere in some ways. We had the Porsches of this world doing charging 350 kilowatt. This is 1,000 kilowatt. We've got 3 to 4 times the kind of other best in class that people were expecting. When we talk about 5 minutes, obviously that's similar to gasoline for 400 kilometers of charge. Some of the others are more like the best in class Lucid, obviously is quite famous. They're doing it in like 100, maybe 180 kilometers in that time. So this is a real step change. And not only is it that, what you've got is an announcement, and they're going to make the vehicles available a month later. So typically you might hear an announcement from a Western automaker, and maybe a couple of years later that tech you've heard about will be there, whereas they're saying these vehicles in China, you'll be able to buy them soon. But yeah, that is only in China.
How did they get it down to 5 minutes?
So it seems like they've improved the fast charging technology through both the voltage. So you have higher voltage on the vehicles. You could lower the current or more the current to accept this power, and then changing the battery chemistry as well. So the interesting thing is that they've added different types of cooling, because if you have really high currents going through the battery, then you have a lot of heat being created. So they've changed their cooling technology. They've improved some of the other intricacies of the cells as well. And on a bigger market point, you've got a lot of companies saying we're going to build solid state batteries, so like next generation battery technologies for the car. Well, is that even needed anymore if BYD can do this with an evolution of the current tech?
So what likely will be the competitive response from the Western battery infrastructure people? They got to up their game like now, don't they?
Yeah, it's just such a race. Like you look at these EVs and you think about buying one, and there's just something new coming that's more advanced, one after the other. So like as a consumer, maybe you don't want to buy because you think, well, I'm going to buy something that'll be obsolete pretty quick. From the Western automakers, they're going to find it hard. You look at BYD, they've just got so many engineers. They're vertically integrated. They're doing much of this by themselves, all the way down to like now buying the ships to distribute these cars they've built around the world, and getting involved in the metals and mining game and things like that. So it's hard to imagine how everybody is going to compete. Obviously, we've got tariffs in different regions to try and block the Chinese out. And then when you think about this tech, there is an element of, do you actually need it? So when you look on the Chinese articles, they were looking at the Xiaomi SU7, which is the vehicle made by the Xiaomi, which is the smartphone maker. So they've entered the market and they're selling electric vehicles in the hundreds of thousands of volume. They've outsold loads of cars. It's kind of an amazing story. And people comparing, saying, well, actually, this one BYD is talking about is $10,000 more expensive. So like the tech is not necessarily everything on fast charging, when there's people who are doing I don't know, fast cars, fancy cars. They got a lot of other features as well. Like, whilst this is a step change, do we necessarily need 5 minutes over 10 minutes? Does everybody care? It's debatable.
I mean, it depends how long your bathroom break is, which, you got to shop, got to get some concessions. Okay, we also had the headline that BYD is outselling Teslas in China in particular. You can't get a BYD car in the U.S., I should point that out. And the BYD sales for this year, about 5 to 6 million cars. So is this 5-minute battery like a big selling point for this in comparison to, say, a Tesla, or no?
Yeah, I think so. And then in China, what you've got is, I think last year, BYD sold something like 1.6 million pure battery electric vehicles. Just the battery powers the car. And I think Tesla was somewhere around 600,000 to 700,000. So it gives you, and they were second. So it gives you an idea. Tesla doing well, but obviously just how well BYD are doing. One of the things BYD had been leaning into previously with these plug-in hybrid models. So you have an engine and you have a battery. The engine might only be small and the car itself might be mainly running off the battery. So they've done quite well with those. And it might just show a little bit of a pivot from them to say, actually, we can maybe do without the engine now. Look, we've got this huge range, huge range, fast charging power vehicles. Like, you don't necessarily need to worry about that also. It might be a pivot from them. In terms of Tesla versus BYD, when you said that they're not available in the US, but they are available in other regions. So they've done very well in places like Brazil and Thailand. There's something like 80-90% share of the EV market there. And like 80-90% share is obviously huge so that's Chinese manufacturers, of which BYD is a pretty major one. They got a plant out in Brazil as well. So they're making moves to kind of dominate those. The charging tech could be part of that too. So the interesting thing is, like, we've had these like charging connector wars. Do you have the Tesla connector? Do you have the connector that all the other manufacturers are using? And in Europe, all the other manufacturers won out. In America, Tesla won out. Well, arguably in some of these kind of small emerging markets, that you could end up with the Chinese connector becoming an interesting proposition, and maybe the Chinese automotive industry will think about that. And it doesn't mean that they've got it so far, but if they're selling the most cars and they've got the most advanced charging tech, then maybe that's a way that they can exert more influence over the rest of the world.
All right, Ryan, really appreciate it. Ryan Fisher is EV charging team leader. That basically means he heads up all the coverage when it comes to EV charging at Bloomberg BNEF. And as Paul was saying earlier, Bloomberg NEF covers pretty much everything: commodities, power, transport, industry, buildings, and ag sectors, all to help with the energy transition, and some hard data there. We are just moments away from a wonderful interview. Guillaume Faure is Airbus CEO, speaking with our own Guy Johnson. Currently, Airbus is having, he's CEO of Airbus. I don't know if I actually said that. They are having a sustainability event at Airbus's headquarters in Toulouse, France. And talking about their sustainability goals, the CEO said that the aviation industry may actually miss its goal of eliminating carbon emissions by 2050 due to technical and infrastructure challenges.
Ooh, okay. Well, I mean, I think, but it's interesting. A lot of those ESG discussions, DEI discussions, sustainability discussions, broadly defined, they're still going on full bore in Europe.
Oh, yeah. Oh, 100%. And I think that what everyone's learning, full stop, is that building out infrastructure is really hard.
Yep.
And even if you want these goals, you have to actually build things to get, you know, the solar from one end to the other, or the hydrogen from one end to the other.
Yep.
And it's just not as easy as connecting like a pipe or something. And that requires a lot of infrastructure, it requires spending, it requires people being willing to get a pipe in their backyard.
That's right. Yeah, that's a big thing.
And if you have not in my backyard, you're like, I don't want to look at it, so I don't want it. At least in the U.S., that's a huge obstacle for building out any infrastructure.
Yeah, absolutely. And we'll see if the permitting changes here in the U.S., maybe accelerate some of that. We'll have to see how that plays out.
All right, well, let's go right now to Bloomberg's Guy Johnson, speaking with the Airbus CEO, Guillaume Faure, again, at their sustainability conference and event in Airbus's headquarters in Toulouse, France.
Welcome back to Bloomberg Technology. I'm Guy Johnson, taking over from Matt Miller for the next few minutes and taking you here to the Airbus headquarters in Toulouse, France, where cutting-edge technology is a day-to-day activity. We're at the Airbus Summit, where we're discussing everything from sustainability to hydrogen to what happens with the next generation of aircraft and the technology that is going to go into them. And I have the great pleasure of being joined here by Guillaume Faure, the CEO of Airbus. Guillaume, fantastic to be with you here at this summit at Airbus's home here in Toulouse. The summit we're at the moment, the big focus is sustainability. A lot of technology is currently being pushed into this space as we try and make aviation technology. The big technology that we're talking about is sustainable aviation fuel. That's going to do a lot of the heavy lifting, but hydrogen and all kinds of other technologies beckon in the future. The target we have right now is to make aviation net zero carbon by 2050. Is that still achievable?
It remains the target, and there are plenty of reasons to believe that it can be achieved. There are also some challenges. One of the reasons we have the summit, the Airbus Summit, is to discuss those topics, to understand better the problem, what goes well, what needs to be done differently. At Airbus, we remain committed to the 2050 objective of carbon neutrality. That's what the industry has agreed together. And tomorrow we will be sharing a lot of good news on the progress. We know that on the sustainable aviation fuel, that's a challenge, and we need to do more work on it.
Is it going to be possible with Donald Trump in the White House? He doesn't seem to see the United States as at the forefront of green technology. In fact, he's going in the opposite direction. Can 2050 be achieved with Donald Trump in the White House?
Well, the progress we need to make to decarbonize aviation by 2050 relies on different pillars. One of them is the planes themselves. That's what we are doing. And for planes, competitiveness means fuel efficiency, and fuel efficiency means sustainability. So the two objectives are aligned. I say economy and ecology are aligned. So we'll keep going, and airlines will continue to buy preferably planes that burn less fuel, whatever the fuel. For the development of SAF, it's a bigger challenge. It's important to have unity. We need a global level playing field on SAF. Right. And obviously, we need to understand better what it will mean for the US and to what extent the others will keep going at the same pace.
Should Europe go it alone?
Well, anyway, we see different dynamics in different places of the world. Europe has gone quite alone on the Fit for 55, putting mandates on the use of SAF. It's a different way. It was already a different way with the previous US administration, with IRA and subsidies for SAF. And China is going also another way. That's one of the problems. We need this to be unified.
You just come back from China. What did you see there? What kind of technology? Are they going to once again leapfrog in the way that we've seen maybe them doing in electric cars?
I think they are really serious on the transition. They're really serious on decarbonized energy, on the use of solar, of wind, of nuclear. They grow. I think half or two-thirds of the additional capacity of decarbonized energy last year was coming from China. So they're really moving forward at the right pace. And yes, there is a likelihood that they would go faster than others on decarbonized technologies, with the risk that we would see in aviation, in fuels, what we see today in electric cars. So we're really taking them serious, but there's also a partner we can rely on for the development of SAF.
Let's talk a little bit about what is happening here in Europe. It seems at the moment that security is more important to Europe than sustainability. Do you see it that way? Is that how it is developing?
I don't think it's more important. I think it's a precondition. You need security to have prosperity, and you need prosperity to fund your climate transition and your decarbonization. So security comes first, and that's what we are looking and what we're seeing in Europe. I don't think there is competition between the different investments, at least at the moment, at least for Airbus. We have different businesses. We have a strong balance sheet to fund the different investments. But yes, there is more that will go to space, to defense, than it was in the past. And that's an opportunity for us because we think it's important for the security of Europe.
You talk about space. One of the key pieces of technology that Europe is relying on at the moment, is being used heavily in Ukraine, is obviously Starlink. How quickly can Europe replicate something similar to what we see with Starlink?
Starlink is clearly a breakthrough. The constellation is already large in the air. We have constellations in Europe that are flying already, but they are much smaller. So we need a demand at scale. We need countries to come together with a common need, and we need the industry to come together to supply. So Europe needs scale. In terms of technologies, we have very similar technologies, but it needs to go into a project at scale.
How quickly can you do that?
Well, it's going to take a bit of time. We are moving as fast as we can. We have indicated that we are in discussions with Leonardo, our friends from Leonardo and Thales, to create a joint company for satellite manufacturing.
Can I think about that as an Airbus of space? Is that what we're talking about here?
It is an Airbus of space. It is a joint venture between companies, so that's probably a bit different, but that's creating the scale in Europe to be able to be competitive on a global scale.
Can you do the same thing in defense?
It has to be done. It's going to be probably more difficult because the sovereignty for security and defense, it's at the level of nations, of countries, and we need countries to come together with common projects to create that scale, and then having the industry serving these projects at scale. But we're too fragmented in defense in Europe. That's very clearly written in the Draghi report. That's something that is now acknowledged. We need to find the solutions.
So in terms of how you're thinking about how you develop Airbus from here, over the last few years, it has been civil focused. Do you see space, defense becoming similar scale arms of Airbus? People have often talked about defense being subscale at Airbus. Is that going to be the future? Is the defense arm going to be subscale? Is space going to be subscale? How quickly can you get it to scale? And will it be of something similar to what we see behind us in the civil side?
Well, we are not only an Airbus in commercial, we are also an Airbus in defense and in helicopters. We have created a scale in helicopters already in the past, and we are the #1 helicopter manufacturer in the world by turnover and by number of helicopters. So that's something we are doing in other areas of business than commercial. Yes, we are also an Airbus in defense with projects like the Eurofighter, with projects like the A400M, where European countries partner together to create a product that is the best in the world at the moment. But we need more of this. And it is the DNA of Airbus to bring collaboration, to bring partnerships, and to create a project that have the right scale, and therefore the right scale of investment, and therefore the right competitiveness.
Do you think Donald Trump is bringing Europe together? Do you think it's going to... Europe relies on a crisis. Is this a big enough crisis to bring...
Europe is making progress through crisis. We are challenged by a number of things changing in the world. The fact that Europe needs to take security and defense in its own hands is something that, in my view, really makes sense. And that's what Europe is doing under a number of pressure points. Ukraine is one of them, what's happening in Ukraine. And also what Donald Trump wants to achieve is another pressure point on Europe to take its destiny in its hands.
Donald Trump talks about his favorite words being tariffs. What do you expect in terms of tariffs? How already is it impacting Airbus? The aircraft behind you, the A321XLR, comes from around the world. We were joking earlier, the nose comes from France, the engines come from America and France. The aircraft is an aircraft of the world, but that creates vulnerability. How are you thinking about tariffs? What has the impact been already?
Well, that's an important point for industry. We had tariffs on aircraft 4 to 5 years ago between the US and Europe, and has been a lose-lose. And therefore, we had a ceasefire in 2021, and I think this experience has been interesting in showing that for a sort of North Atlantic ecosystem, both sides of the Atlantic, it is only lose-lose in putting tariffs. We have not heard about tariffs on aviation at the moment, on aerospace. I think that's a good sign. There's nothing more, I would say, really to prepare than to communicate, to exchange, to explain. We have a lot of infrastructure and manufacturing capabilities, final assembly line in the US. We are procuring from the US, we are selling to the US, and the US manufacturers are doing the same with Europe. So tariffs in the middle of the Atlantic would really be a big burden for both sides, and maybe that would be even tougher for the US manufacturers.
Have you been putting extra resources into the Alabama plant? Have you been stockpiling? Have you been... There's no kind of preparations or anything that you have been taking on thus far in order to get ready for something that could be coming?
No, we keep doing what we've been doing so far, relying on Alabama, indeed. That's a plant where we have 3 final assembly lines. One is not yet delivering planes, but the 2 others are. So we are procuring from everywhere around the world, assembling there in the US with US jobs, 2 US airlines as well. So I think we are key to the US ecosystem, to the aviation ecosystem, and we think that plays a big role in how tariffs are targeted.
Okay, final quick question. You sit on actually the Business Council in America. You speak to CEOs there. What message did you take to them from Europe? What is the message that should be coming to A, US business, and B, the US administration?
Well, at the moment, I think there's a lot of questioning of where all this is going, what it will mean for which industry. So it's a bit on wait-and-see mode to understand better for how long tariffs could come, who will be impacted, how to respond to the tariffs, if any. As I told you, we are not directly targeted with tariffs at the moment. But indeed, there is a lot of questioning and to understand better what is changing and how to adapt. We are in a world that is fast changing, and it's a lot about adapting to those changes.
Guillaume, it's great to be here in Toulouse. Thank you very much indeed for inviting us here to Airbus's headquarters in Toulouse in France. Guillaume Faury, the CEO of Airbus. That wraps up that conversation.
All right, that was Guy Johnson speaking with Airbus CEO Guillaume Faury. Interesting set of headlines that are coming out, particularly when it comes to sustainable aviation fuel. Everyone says that they want it, but getting the contracts done to then incentivize the supply is really tricky. And he's saying that we need a really unified approach, and also talking about tariffs being a lose-lose for the industry. You can kind of get that from any CEO that you talk to that builds stuff.
Yeah, particularly stuff like the guy was just pointing out, you look at the A321, stuff comes from everywhere around the world.
Oh, yeah.
Oh, boy.
You can't delineate that. All right, let's get you caught up right now with the business flash. And for that, we go to Charlie Pellet.
All right, thank you very much. And here's what's going on. The Dow, the S&P, and NASDAQ, they're all advancing right now. We are close to session highs on the S&P, right to the numbers here, with the S&P up by 1.6%. Stocks are rising, led by tech shares. Traders becoming more optimistic about President Trump's tariffs being more targeted than anticipated. The Dow Jones Industrial Average up 557 now, up 1.3%, while NASDAQ is up 346, up by 1.95%. Again, to put it all in context, S&P up by 1.6%. 10-year, 4.31%, with a 2-year that's currently yielding 4.01%. Gold down $7 the ounce, a drop there of 0.3%. West Texas Intermediate Crude 69.13 a barrel. WTI up 1.2%, and Bitcoin now up by 3.6%, 88,196 on a Bitcoin. A new owner for Dun & Bradstreet Holdings. Clear Lake Capital Group has agreed to acquire Dun & Bradstreet in a deal that values one of Wall Street's oldest data and analytics providers at $4.1 billion. Bloomberg LP, the parent of Bloomberg Radio, competes with Dun & Bradstreet in providing financial information. And the DNA tester 23andMe Holding has filed for bankruptcy after it was unable to find a buyer to rescue it from insolvency proceedings. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker studio. We are streaming live on YouTube as well. Interesting story coming out of the banking sector. Wells Fargo became the first bank to abandon its climate goals, given the current political environment. So that has a lot of implications, one of which is, how about for the ESG funds that were invested in Wells Fargo? What do they do with their shareholding? Shaheen Contractor looks at that kind of stuff. She's a senior ESG analyst for Bloomberg Intelligence. So, Shaheen, first, tell us what Wells Fargo did. What did they announce specifically?
Sure, boss. So Wells Fargo abandoned its climate financing goal in particular. So that's the emissions from its loan book. Typically, it's a much bigger emissions chunk than its sort of operations. So just to give you a sense of scale, it's about, I would say, 95% of its total emissions. So that's what Wells Fargo did. Other banks like HSBC have delayed their operational emissions. Again, that's about 5%. So that's a much smaller piece.
So how do we distinguish between, headlines where it's like forgetting climate goals and just sort of changing climate goals for some of these big banks?
Well, you have to dig in. I think the difference is, again, that operation versus financed.
Mm-hmm.
It's not as, how do I say this, as
binary
as like diversity, where they can dilute the language a little bit. Carbon goals are either there or not there.
Okay, so it is actually binary.
Yeah.
Are they walking away? Are they saying we're not going to restrict our lending to companies that have to fossil fuel companies? We're not going to do that anymore.
Correct.
Right?
So that's in a way what they're saying, because what a finance goal would mean is we're going to reduce the emissions from our loan book from X to Z, and that would probably come with reducing to these sectors.
Okay. Now, what's JP Morgan, what's Citi, what's Bank of America said?
Nothing yet so far.
Okay.
So they have exited the Net Zero Alliance.
Okay.
That being said, they've still been on track with their goals. They've still reduced emissions. That is in line with their targets. What's also interesting is Wells Fargo has also done that, but it's still abandoned its goals. So what's to come, we'll see.
What's interesting, talking about abandoning goals, like Airbus was just saying in their sustainability conference that they still want to get to that net zero by 2050, but they're constrained by like infrastructure and technology, et cetera. How much of that is wrapped into the conversation? How much of that is a load of nothing?
So Wells Fargo in its statement actually said that they attribute this to changing customer behavior, to politics, to a number of things. However, given that they're quite on track to achieving this goal, which is also an analysis we've done, we've attributed it to politics.
So the politics in the U.S. are different from the politics, obviously, in Europe, for example.
Correct.
So are we seeing any of the big European companies or sectors of companies walk back some of their ESG goals?
So in a much smaller way, yes. So again, HSBC and UBS have delayed their operational emissions goal. Again, that's I would call that almost insignificant for a bank. So they have. The bigger piece is the financed emission goals, which we'll see.
What do shareholders think?
So, well, we don't know yet. I think the impacts of that are still to come from all of this, given that all of this is a lot more recent.
Well, let me ask you a different question. Did the shareholders like it to begin with?
I don't know about that.
Okay.
So if I'm a shareholder, if I'm an ESG fund
Right.
and I own Wells Fargo, do I just sell my position here?
So it could be at risk, yes. I mean, climate is quite high up in ESG funds' agenda, and we've done the analysis. So for Wells Fargo, about 0.5% of its market value is held in these ESG and climate funds. Honestly, that's quite small.
Right.
Right? So the risk lies in other more exposed peers.
So just give me a sense, once again, I know we've gone over this number a million times. How much money is in ESG funds, roughly?
So if we look at ETFs, which is the analysis I've done, it's about, I would say, close to 600 billion.
Okay.
Now, let me go back. So I did this analysis 2 years back. At that point, all ESG labeled funds was about 2.3 trillion. So that's to give you a sense of scale.
So
now,
it's really declined in funds flowing out of ESG.
No, sorry. So I go back to the 2.3 trillion number, which is all ESG funds. The ETFs are a much smaller share. So I would say that we've not done that analysis more recently, but it is 2.3 trillion is quite a large, substantial share.
Yep.
When you talk about the amount of assets that are in broader funds, not just ETFs, but just broader funds, what are the numbers that we're talking about here?
So that would be the 2.3 trillion that I mentioned. So this is all funds with words like ESG, climate, etc. Yeah, I would say a lot of those funds are changing names. So
okay, so we don't know if they're going to be labeled that later on down the road.
Correct.
Okay, what's your biggest call for this industry for this year? Like, what do you think the biggest change is going to be?
I think, given the recent headlines, I think a lot of it is divestment risk, which I don't think people realize. I don't think people realize the ESG investor base that is in a company. So for companies like State Street, for example, they've axed their diversity policies, for example, and 3%, well, up to 3% of their investor base is actually in ESG funds. So I would say that's quite an exposure.
All right, Shaheen, thank you so much. We appreciate that. Shaheen Contractor, Senior ESG Strategist for Bloomberg Intelligence. Looking at this market here, holding on to the gains, Alex, kind of right at the highs of the day with the S&P up 1.6%. The Dow up, I like to quote that for John Farrow. I know he likes that, 560 points. That's 1.3%. And the NASDAQ up 2 percentage points. So strong move to the upside.
It definitely feels like a definite risk on kind of day. Also taking a look at oil prices. So Brent is up almost $1, and this comes as there will be some reprisal if a country buys oil from Venezuela. Whatever we buy from that country will now be taxed by 25%.
How big is Venezuela as a producer? Pretty big, right?
So yes, it's huge. It has a lot of reserves. It's also the quality of oil that you really need for a lot of refiners around the world. So that was quite interesting. So you're definitely seeing a lot of movement on that. We'll see. We'll see about the auctions later this week. We'll see what the Treasury market is going to do. Also looking forward to some economic data. That wraps it up for me and Paul. Balance of Power with Joe Matthew is up next.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump questions the impartiality of the federal judge who blocked his plans to deport Venezuelan migrants to El Salvador in a social media post. CBS's Jake Rosen reports it comes as an appeals court is being asked to lift the judge's order.
The Trump administration has argued since the first hearing, which was over a week ago now, that Judge James Boasberg had no authority to even put a temporary block because they believe that the Trump administration's invocation of the Alien Enemies Act is unreviewable. rule, which means that the executive has the authority to do what it pleases with invoking that as to any group of people that it wants to, and that there is no authority for the judge to even have done that in the first place.
The CBS's Stacey Lynn tells us the White House is asking the Supreme Court to halt a ruling ordering the rehiring of thousands of federal workers.
The administration filed an emergency appeal today arguing the ruling should be put on hold because the judge didn't have the authority to order some 16,000 probationary employees be hired back. The U.S. District Judge in San Francisco had said the firings didn't follow federal law and required immediate offers of reinstatement be sent.
Indications now President Trump's tariffs will be more targeted when rolled out next week. CBS's Ed O'Keefe says Trump turns his attention to Louisiana later today.
They're set to announce about $5.8 billion in steel manufacturing set for that state, driven by Hyundai, the Korean automaker. That deal coming as an example, the White House will say, of the ongoing push to manufacture such things in the United States.
A federal judge has temporarily blocked Elon Musk's operatives from accessing people's private data at 3 federal departments. Personal data is an issue as the genetic testing company 23andMe has filed for bankruptcy and the CEO has resigned. CBS's Nancy Chen on what it means for millions of customers.
The Attorney General of California, where 23andMe is headquartered, urged customers to request their information be purged. He says they should consider invoking their rights and directing the company to delete their data and destroy samples of their genetic material.
At the Supreme Court arguments today on the number of black congressional districts in Louisiana.
We're in the business of complying with federal court decisions. And when they told us that we needed to draw a second majority black district, that's what we did.
Benjamin Aguinaga is Louisiana's Solicitor General. Stuart Nafea is with the NAACP.
The state had exercised its authority to protect favored incumbents and unite preferred communities of interest.
And checking Wall Street's, right now the Dow is up 562 points. This is CBS News. A piece of social media history has been sold.
The big blue Twitter bird that hung outside the company's old offices in San Francisco for 16 years went for almost $35,000 at auction. It weighs about 560 pounds, measures 12 by 9 feet. After he bought the company in 2022, Elon Musk disposed of the iconic symbol and replaced it with a black X. He also sold off other items from the old office, including kitchenware and furniture. Deborah Rodriguez, CBS News.
Japan's official cherry blossom spotters have confirmed the first blooming of the country's favorite flower. A specimen tree at a Tokyo shrine was spotted with more than 5 blossoms flowering on it. Cherry blossoms usually reach their peak in late March to early April in Japan, just as that country celebrates the start of a new school and business year. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The tariff relief rally arrives, but will it last beyond today? Welcome to the fastest show in politics, with President Trump now set to announce tariffs on April 2nd that will be more targeted than many expected. Certainly this market was factoring in. We're going to get into this straight ahead with Bloomberg White House correspondent Jordan Fabian. Lawmakers streaming back into town today with Trump tax cuts on the agenda. We'll look at the to-do list with Nathan Dean at Bloomberg Intelligence. And as President Trump holds another cabinet meeting today with special guest Elon Musk, we'll have analysis from our signature panel. Back together on a Monday, Rick Davis and Jeannie Shanzano are with us for the duration. And we start, as always, on Wall Street. Let's look at those markets, feeling a little bit better about tariffs. Charlie Pellet has more in New York. Charlie?
Thank you very much. Green, certainly the color of the day today. Back to work Monday with the Dow, the S&P, NASDAQ all advancing. Stocks are up more than 1.4%. That's where the Dow stands right now, up 585 points, a gain of 1.4%. Keep it all in context. We got the S&P ripping higher now by 1.7%, up 98 points. NASDAQ up 381 on the NASDAQ Composite Index, a gain there of 2.1%. Your 10-year 4.31%. Midday we've got the 2-year yielding 4.02%. Gold down $7 the ounce, down 0.2%, 3,014. West Texas Intermediate crude up 1.5%, 69.27 a barrel. And Bitcoin right now up 3.9%, 88,454 on Bitcoin. Well, certainly tariffs a major concern for investors. Joe Livornia is at SMBC Nikko Securities Americas, and this morning on Surveillance he told us there is a bigger concern in Washington than the uncertainty over tariffs.
What worries me much more on the uncertainty side is what are we doing with tax policy? Because if we look at the uncertainty index, what we see is concerns about taxes are sky high. So we need the Congress to figure out, are these tax cuts getting extended? Are they not? Are there additional tax cuts? How might we pay for them? And that, to me, is a bigger concern for the economy and what it means for CapEx, ultimately growth, and then nominal activity.
Joe Livornia of SMBC Nikko Securities. BYD's sales last year surpassed the $100 billion mark, leapfrogging Elon Musk's Tesla on revenue as the Chinese auto giant wows consumers with a range of electric and hybrid cars packed with high-tech features. ADRs of BYD, they're up today by 5.4%. Tesla, meanwhile, surging, part of a broader tech rally, up by 9.7%. And a source tells Bloomberg President Trump will tout plans by Hyundai Motor to invest $20 billion in the United States. We are expecting an announcement, 2 p.m. Wall Street time. We will have that for you live on Bloomberg. Balance of Power continues right now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie, thank you so much. The voice of Wall Street and the New York subway on your radio every day here. Welcome to the Monday edition of Balance of Power. I hope you had a great weekend. We're getting back to it. There's going to be actual traffic in Washington in a moment because lawmakers are all streaming back into town, coming off what was apparently not a very fun recess with some chippy town hall meetings. It's great to have you with us here on Bloomberg Radio, on the satellite channel 121, and on YouTube, where you can dial us up right now. Search Bloomberg Business News Live. And we'll have a seat for you in the studio with the big sigh of relief on Wall Street. You just heard the great Charlie Pellet describing here. Tariff relief. And it's all because of Bloomberg, by the way. This story that hit the terminal over the weekend really seemed to be the salve the market was looking for, whether we hit bottom or not. The idea here is that tariffs could be more targeted when Liberation Day arrives. That's a week from Wednesday, you know, April 2nd. When reciprocal tariffs are set to take place. But the president's keeping us guessing today. We had this reporting from Josh Wingrove and our White House team. Then, of course, the president hits Truth Social with the idea of secondary tariffs on Venezuela, making things even more difficult to understand. But we're going to stick with the good vibes right now and bring back an old friend. Jordan Fabian is with us, Bloomberg White House editor. We don't always have the opportunity to spend time with Jordan at the table. It's great to see you, sir. I hope you had a good weekend. Show us the truth on this, because Wall Street seems to think that it's safe to buy again. Did that much change?
You know, I think there is some change in the sense that during the campaign, Trump wanted these universal tariffs. So he wanted a flat rate for every country. Yep. And so if you judge it from that arc, we are at a different place, which is reciprocal tariffs on maybe not every country. Maybe, you know, the steel and aluminum tariffs, China, Mexico tariffs, we're not all stacking together. But I'm still not convinced until it comes from Donald Trump's mouth that he is decided 100% to pare back whatever he had originally planned.
That's the problem here with the market, right? Is that we know this could be different tomorrow. But this reporting that we have is based on the latest thinking at the White House, knowing that we have over a week before this is official.
Right. And you know, I think in the markets, just looking at it from an outside observer, their assumption has always been that these tariffs are not tariffs for rebalancing trade, not tariffs for collecting revenue. They are tariffs as a negotiating tool. And the notion that he would be paring back on them and perhaps negotiating some sort of carve-outs for trading partners would, you know, sort of confirm their priors, right, on Wall Street, that he is not going big. But if you listen to what Trump has said, he wants to go big, and he is resistant to the notion that he is backing down. He never wants to be seen as backing down, a sign of weakness. So all of this is still a moving target. I would believe, you know, I believe our reporting, obviously. I believe that the aides have narrowed the scope of this thing, but exactly what form that takes and which partners it hits still remains to be seen.
Hard to take that to the bank. And I mean, look, clearly this is a market that many saw as oversold, and there could be some bargain hunting, bottom fishing going on here. This post on Truth Social today, by the way, is it not written by him when he was referring to himself in the third person? It starts, President Donald J. Trump announced today. Does that come from the staff?
A lot of it's him, a lot of it's the staff. It's always a little hard to suss out.
Sometimes you get a DJT and you know it's him, right?
Exactly.
I don't have that today. But he's talking about secondary tariffs, and in this case, on the country of Venezuela. He says, for numerous reasons, including the fact that Venezuela, he writes, has purposefully and deceitfully sent to the United States undercover tens of thousands of high-level and other criminals, many of whom are murderers, people of a very violent nature. And he refers to the Tren de Aragua gang that, of course, was designated a foreign terrorist organization. Is this about tariffs or a marker that he's dropping here on the fact that these are foreign combatants, essentially, that allows for his use of the Foreign Enemies Act?
Yeah, you read that post, and your mind doesn't really go to tariffs. It goes to oil sanctions, right? And so I think we're still trying to figure out the shape of this thing, what it actually means. But look, it's twofold. He seems to be wanting to choke off Nicolas Maduro's main source of revenue over this migration issue, et cetera. But it does have the secondary impact of hitting China, which is the largest, or one of the largest, if not the largest consumer of Venezuelan crude. And so, again, when we think back to reciprocal tariffs, we think about he's already got a 20% duty on China on the fentanyl issue. He's got the prior tariffs that he put in his first administration. Now there's this 25% tariff sanction, whatever you want to call it, charge on Venezuelan oil that that China would theoretically be paying as well. This is all starting to add up, and so it's important to kind of look at the broad spectrum.
To your point, he does right here. Any country purchases oil and or gas from Venezuela will be forced to pay a tariff of 25% to the U.S. on any trade they do with our country, therefore the secondary tariff. But we also know that there's a court case underway about these Venezuelan migrants who were put on an airplane without actual proof that they were part of this gang. There's a hearing starting, in fact, at 1:30 p.m. today, in which the administration will urge the appeals panel to overturn this judge's ruling restraining the use, blocking the use of the Alien Enemies Act to deport these migrants without due process. This is starting to get a little bit complicated here, but does a post on Truth Social like this help to make the argument for a case that's likely going to the Supreme Court?
Yeah, the judge would have to take all of that, right? That this...
They're connecting the dots on a lot of stories here, Jordan.
Exactly. The bigger legal issue to me, though, is, in that case, is this notion that Trump is perhaps ignoring court orders. And like that seems to be the major issue that they're pushing. Namely, you've heard Trump allies say they want to perhaps push to the Supreme Court, not only using this Alien Enemies Act to deport whoever they want, but also to challenge the notion of nationwide injunctions, that one federal judge can block an administration policy nationwide. It's important to point out that the Trump administration, the first time around, and also Trump while he was out of office, did a lot of lawsuits, got some nationwide injunctions against Biden policies that he, of course, bragged about. So they've been happy to use that when they were out of power, but now that they're back in power, he wants unfettered ability to carry out his agenda. And so I would expect those two issues to get pushed all the way to the highest court.
Yeah. Jordan, we're getting some headlines out of a cabinet meeting that we knew was scheduled today. This is a little different because apparently we don't have a live feed coming out of it, but I guess we have reporters in the room here. Companies are all coming back to the U.S. He says the tariffs will make it so they want to come back. That's why they are coming back. I bring this up not so much for what he's saying, but the fact that he has gathered another cabinet meeting. We understand Elon Musk is going to be present. There was one meeting that was kind of a kiss the ring, then a couple of private sessions in which they really had to hash out some differences with Elon Musk. What is this one?
Well, I guess we'll find out if we have reporters in there now, but it seems like they've tried to have some sessions after that first one, given the scope of the Doge cuts. They want to try to get the cabinet on the same page as Elon Musk. He's really tried to move fast and break things. That's really caused some friction with some cabinet secretaries. Listeners might remember that New York Times story that came out after the last one of these meetings that Marco Rubio and Elon Musk got into a fight, and then Sean Duffy jumped in, the transportation secretary, and so I think there's still a lot to be decided there. Elon hasn't really showed any willingness to back down, and meanwhile that's ruffling some feathers, and so they still have a lot of issues to iron out.
Will each member of the cabinet have to buy a Tesla by the time this is done? Were you there that day with the cars in the driveway?
I wasn't there. Unfortunately, we were not in the pool, but I heard all about it and saw the video.
Boy, you sure did. We played that up as well. Not to mention Howard Lutnick's buy recommendation on Tesla shares, which incidentally are higher today, Jordan. I have to check because that's our job. Tesla right now up 10% or $24 a share. I guess we'll find out what they say in this meeting. With the help of Jordan Fabian, our White House editor, in the flesh here on Bloomberg, dial up YouTube, Bloomberg Business News Live, to watch it all happen here. And stay with us on the radio. We'll have much more coming up ahead as Nathan Dean joins us from Bloomberg Intelligence. Lawmakers back in town. They avoided a government shutdown, but now the hard part begins. We're talking Trump tax cuts and a debt ceiling. Just got a date on that, by the way. Stay with us for a lot more right here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got stocks just off session highs, but still a rally of 1.6% right now on the S&P 500 index. Stocks getting a big tech lift on this back-to-work Monday. Bonds are falling on tariff signs. Right now, the S&P's up 95, 57.62 where we stand, up 1.7%. The Dow up 549 points now, up by about 1.3%, while NASDAQ is up 373 points, up 2.1%. The Russell 2000 index of small cap shares up 2.1%. 10-year 4.32%. The 2-year 4.02%. Gold now down $11 the ounce at $3,010. For gold, that's a drop of 0.3%. Bitcoin is trading higher by 3.5%, 88,117. West Texas Intermediate crude up 1.4%, 69.28 a barrel. A new owner for Dun & Bradstreet Holdings. Clear Lake Capital Group has agreed to acquire Dun & Bradstreet in a deal that values one of Wall Street's oldest data and analytics providers at $4.1 billion. Bloomberg LP, the parent of Bloomberg Radio, competes with Dun & Bradstreet in providing financial information. Dun & Bradstreet shares, they're up by 3%. Briefly, a headline from the Bloomberg Professional Service. HSBC is weighing outsourcing some trading operations to lift returns. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Back we go to Washington. Indeed, Charlie Pellet, that's what lawmakers are saying, getting on airplanes. I guess some of them getting in a car to get back to the nation's capital here because, yes, the home district work period, known to some as recess, is over. And it wasn't a very fun recess either. As we've shown you multiple instances of town hall meetings going off the rails. That's, yeah, for Republicans, but some Democrats too, who were pretty angry about the way things went with the old CR. As we wonk out together here on the radio, the continuing resolution, right, the stopgap plan that avoided a government shutdown. Democrats did not want to play along, right? They didn't in the House. Then Chuck Schumer said they weren't going to do it in the Senate, and then they did it in the Senate. Chuck Schumer, of course, within 24 hours, changing his opinion from an op-ed saying hell no to a call for Democrats to join him. And of course, that's led to a lot of calls for either his removal as the majority leader or somebody to come along and primary him in a couple of years. He showed up on Sunday morning television, did meet the press, and he's not going anywhere. Listen.
Look, I'm not stepping down. And let me just say this, Kristen. I knew when I cast my vote against against the government shutdown that there'd be a lot of controversy. And there was. But let me tell you and your audience why I did it, why I felt it was so important. The CR was certainly bad, you know, the continuing resolution, but a shutdown would be 15 or 20 times worse.
And that's bad. That's where we start with Nathan Dean, who, as you know, is always running the odds here. Bloomberg Intelligence senior U.S. policy analyst. He brings us in off the ledge. He points us to the light, and usually what the actual news is, because so much of this is bluster. Nathan, great to see you. Hope you had a good weekend. Welcome back. So he's not going anywhere?
No.
You didn't think he was going anywhere?
No, I don't think so, because, look, Senator Schumer made a very tough choice, and it was a very unpopular choice with the Democrats,
Yep.
but had the government shut down, we'd still be shut down today. You know, I think Elon Musk and the Doge Committee would have been very, very excited about the idea of a shutdown. And there was a lot of talk amongst the Democratic senatorial circles that had you shut the government down, 75% of the government workers would be deemed non-essential. They'd go home. That's right. How many of them would come back? So I think the thing for the Democrats to remember is that, you know, we have an election, 18 months from now? So there's going to be a lot more news cycles to come forth over the next few weeks and months. That's where Senator Schumer is going to have to decide where the party goes to see if he is going to stay as the majority leader or minority leader in the Senate. But I don't think he's going to step down. It's not in his blood.
By the time we're done with this reconciliation process, no one's going to even remember this anyway, right? You think people in the midterms are going to be voting on what Chuck Schumer did about a CR that nobody could remember? Because before this happened, you told us if it shuts down, there's no off-ramp, right? We could be shut down the rest of the year. So what does Bernie Sanders Ed Markey and the rest of them want? Did they really wanted Chuck Schumer to shut down the government, or this is good politics just to say so?
Well, I think go back to 2010. It's almost like what the Republicans were dealing with back in the Tea Party days, where they said, look, we don't like what President Obama is doing. We want to fight. And then the established Republicans were like, no, we have to figure this out in a different way. We just can't go out there and fight. It's very similar to Democrats, the base right now, saying we want to go out and fight. I do think a fight is coming. I do think come September 30th, if we can't figure out how to fund the government another year, you know, there could be a significant shutdown. At that point, the debt ceiling will most likely be resolved. We could be in the thick of a reconciliation debate at that point. But I think the Democrats are going to pick a fight. They're only going to do it when they can figure out how are they going to use this to their advantage. And March was not going to be that time.
Yeah. So let's talk about what's real here, and that is reconciliation. Lawmakers are going to come back into town. They got this thing behind them. And you've got a Speaker of the House who wants to see a vote done by Memorial Day, a Senate that's preparing to take the lead. What's actually going to happen in the next couple of months, or is this going to be something we kick around all year?
So we had an internal call this morning with some of the equity analysts, and I told them that, look, the next 3 weeks, you're going to see a lot of headlines coming out. So we're prepared for headline risk because right now the Republicans in the House are trying to figure out how are they going to pay for this $4.6 trillion tax reform bill. Is this going to be tax changes? Is this the Inflation Reduction Act? Lots of headlines. We still don't think that they can come up with the specifics, though, by Memorial Day. We think this is going to go into the summer. But the question is, really for us, is Medicare going to be impacted? And also, how is the Inflation Reduction Act going to be impacted? Think more specific targeted cuts than I think a broad repeal. But the second thing to keep in mind is the Senate is talking with the Senate parliamentarian at this moment about changing the baseline from a $4.6 trillion price tag to a $0 price tag. And if that's the case, it's going to raise all deficit raising in questions, and it's going to make its own difficulties to get through the House. But ultimately, we do think the Republicans are going to succeed on some form of reconciliation bill. I can't tell you the specifics, but I do think they're going to get there probably in the third quarter.
Interesting. This is why a lot of folks are thinking that, you know, we may not have bottomed yet here in the stock market while we're risk on today. Nathan, I'm getting some headlines out of the cabinet meeting that we can maybe walk through together here in real time. Let's imagine we just got Nathan on the phone. We're calling him as his client. This is happening right now, Donald Trump in the cabinet meeting. We will be announcing cars and pharma, announcing car tariffs shortly, pharma at some point. Lutnick reiterating April 2nd launch of external revenue service. There's going to be more. They're rolling on this stuff right now inside the cabinet meeting. Does this add, when we see cars and pharma, uncertainty that we did not have this morning?
No. So cars
saw this coming no matter what.
Cars and pharma are two of the sectors that President Trump has been talking about for the last couple of weeks. That does not surprise me.
The idea, though, it could be more targeted than we were thinking, seemed to give the market a bit of a lift.
Well, and I think that's a positive thing from the broader market, but they were always going to target specific sectors. I mean, President Trump loves to talk about the fact that Ford and GM have problems or issues trying to sell in the European auto space. He does the same thing with American banks trying to go into Canada. But for April 2nd, obviously President Trump's going to make a big splash, Liberation Day. That's what he's calling it.
Right.
So you're going to see a lot of statements. You probably are going to see tariffs go into fruition that day under the International Economic Emergency Act. So tariffs are coming. They're going to be more secretarial and more specific. But also don't be surprised, probably in this automobile maker case, that President Trump also announces another investigation, and it kicks the can another 2 to 3 weeks. I'm just saying that, like, I think it's going to be a combination of both. I think there's going to be certain areas that they're going to hit immediately, and there's going to be other areas that they're going to say we're going to do another investigation, because President Trump comes out with these statements. It's a very shocking statement, but there's a negotiation period, and somehow it's walked back. But the thing we are telling our clients is that incrementally, these tariffs are coming, and once they come on, they're very difficult to come off.
Boy. So what does the client say to you at that point? Where it's like, well, geez, Nathan, I don't know if you helped a lot. So I can count on these. But even if there's a delay in an investigation, I don't know if I can count on these. We're still in a world of uncertainty.
Well, the question you have to answer is, what do you think those other countries can give in return? And so in the automobile space, think of it this way. If President Trump puts secretarial tariffs on automobiles, you know, there could be something that the European Union in particular comes back with and says, look, we want to negotiate that in particular. Like, I know I'm not being very helpful in terms of specifics, but you have to game out this idea here. And what we tell our our clients is plan for a couple of things. One, plan if these tariffs are going in that day. Okay. If they're going in that day, obviously negative reaction, you're going to have to respond to it. Right. And then those tariffs are going to kick in right now, and it's going to go over the next few quarters. If there is a negotiation, if this is an investigation of a type of tariff, you're looking at probably about a 30-day extension to that. And within those 30 days, you're going to be in the same spot that you are right now. But ultimately, some form of these tariffs are coming. It's just a matter of what exactly is the scale back of that? Right. Is it more kick the can? But President Trump has shown no desire to actually walk back from this tariff fight. All he does is kick the can a little bit longer.
Delay it.
But eventually there will be a point where these tariffs come on.
Is there a boy who cried wolf date on this at some point, though, where the market says, all right, we're going to get on with our lives here?
There is, and we've had that question from clients all the time. Yeah. Like literally just last week, we had a client from New York call up and say, is this a boy cried wolf mentality? Mm-hmm. And look, there is going to be some type of thinking, but if you prepare for the boy cried wolf mentality, you're also the one that's probably going to get eaten by the wolf, if the wolf shows up. Wow. So I would just say that, like, everybody has to make their own decision when it comes to this, but for us, we go back to this pattern of shocking statement, type of negotiation, some form of scale back, but incrementally the tariffs get larger and larger.
This is great analysis, as always, with Nathan Dean. The Bipartisan Policy Center raised its hand over the weekend. X date. Not quite as bad as we thought, right? Somewhere, this is like the cable guy, from mid-July to early October, it predicts. Now, we're going to get an actual CBO forecast on Wednesday. Are these market-moving headlines?
No, I think most people are taking two views here. One is the X date most likely be in August, late July or August. Our chief rate strategist, Ira Jersey, has that as his belief as well. Mm-hmm. But we also won't know the true manner of the X date until after April 15th. We have to see what those tax inflows are. So after April 15th, both the Bipartisan Policy Center, Bloomberg Intelligence, all these other folks are going to come up with a much more targeted X date. But that X date is going to come this summer. Whether it comes July or June, hopefully not during August recess, but, we'll have to figure that out. But, the debt ceiling, raising the debt ceiling is going to be a bipartisan manner. We don't think it's going to go through reconciliation, and we're putting around an 85-90% chance that the debt ceiling will be raised. Wow, I just don't think there's any really desire to really have much of a fight.
It's just a question of by how much, I guess, right? Yeah. Are we talking $4 trillion or more or less? Where are you?
I think President Trump doesn't want to see the debt ceiling one bit. I think President Trump would be easily happily to mint the coin, and so I wouldn't be surprised if this gets pushed off to beyond his administration.
Can we do a whole bunch of stories about minting the $1 trillion coin again? Is that what you mean? Is that what we're going to do?
We're not going there yet.
I missed that.
We're not going there yet, but in a worst-case scenario, leave that option open.
I miss Stumpy and the $1 trillion coin. By the way, did you see cherry blossoms set to peak the end of this week? They're coming out early. The Stumpy tribute in your office is going to have to come back on the air at some point here. This is an important part of our narrative surrounding Nathan Dean. If you don't know Stumpy, Google it. It's a big thing here in the nation's capital. I'm Joe Matthew in Washington. Thanks for coming along. You've got some news here coming out of this cabinet meeting, and we'll bring you into the room when they play this back a little bit later on. Mid-July to early October, ready for your X date. Keep that in mind as we digest what we just heard from Nathan Dean. Bloomberg Intelligence, stay with us. We'll assemble our panel next. Rick Davis and Jeannie Shanzano are on the way in, right here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are rallying. S&P 500 index gaining now by 1.6%. Traders are buying up beaten down tech shares, and signs of more targeted U.S. tariffs are reducing demand for safe haven assets. The S&P right now closed to session highs, up 1.5%, higher by 86 points. The Dow up 485, up 1.2%. NASDAQ up 355. For NASDAQ, a gain of 2%. The 10-year 4.31%, with the 2-year currently yielding 4.01%. Gold down 0.4%, $3,010 the ounce. West Texas Intermediate crude up 1.3%, $69.15 a barrel. And Bitcoin, 88,082 Bitcoin right now, up by 3.5%. Stocks are rallying. S&P again up by 1.5%. There's a major inflation report on this week's U.S. economic agenda. And with that story, here's Bloomberg's Vinny Del Giudice.
The government is slated to issue the Federal Reserve's preferred measure of U.S. inflation, core PCE, on Friday. Bloomberg Economics says the inflation data will probably show wide price increases, especially in the merchandise categories, as the White House dangles tariffs. The Fed's own projections anticipate inflation will accelerate this year, and the central bank is holding off on further rate cuts. Vinny Del Giudice, Bloomberg Radio.
Billionaire Reed Hastings, the co-founder of Netflix, is donating $50 million to his alma mater, Bowdoin College, one of the richest American liberal arts colleges, to create an initiative for artificial intelligence and humanity. Again, Netflix shares, they're pushing higher, up 0.3%. S&P today up by 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thanks for hanging out with us as always. Watching Wall Street for us here on the fastest show in politics. Thanks for joining Balance of Power, the Monday edition on Bloomberg Radio, on the satellite radio, channel 121, on YouTube as well. Search Bloomberg Business News Live. You can dial up our live stream there and just let it run straight through the day for all of our shows from New York and Washington, D.C., where lawmakers are coming back to town, and we'll have a lot more on that. We're going to be talking at the top of our next hour with Congressman Bill Huizenga, Republican from Michigan, 4th District. With Trump tax cuts on the agenda, a debt ceiling that needs to be raised, and a lot of work, a lot of tough work that needs to be done between the House and the Senate when it comes to the Republican reconciliation plan that we've been talking about for months. Actually get down to it now that they have avoided a government shutdown and at least have the lights on for the rest of the year. There's a cabinet meeting underway right now as we prepare to bring Rick and Jeannie into the conversation. It's one that I guess we're going to actually bear witness to. We didn't know about this earlier, but that's the way things go with this White House. They have apparently allowed reporters with cameras and microphones into the room. So pretty newsy so far, actually, or is it? I can never tell exactly. Wall Street's in a good mood right now, so we're not going to mess with it. The president's talking about tariffs again, having promised a secondary tariff on Venezuela earlier today in a Truth Social post. He says, and that, by the way, is something the president's been talking about here, but announcing cars and pharma. Cars shortly, he says, pharma at some point. And we went up with the red head, announcing car tariff shortly, pharma at some point, 12:27 p.m. East Coast time. Markets really didn't blink. We're still looking pretty good here. The S&P 500 up 1.5%. NASDAQ is up 2%. Because as we, I think, established with Nathan Dean, nobody knows exactly what any of this will mean. And it's entirely possible, if not likely, that all of these sectoral tariffs, as we call them, could in fact be delayed again in the spirit of another review or investigation. But something's going to happen on April 2nd. That's Liberation Day, right? Is there a lawmaker, by the way, out there who's put Liberation Day up to be a federal holiday? I'm not even kidding. You've got legislation up there to put Trump on Mount Rushmore, make his birthday a federal holiday. Liberation Day, April 2nd. That's a week from Wednesday. And our signature panel is back with us, I'm happy to say. Jeannie Shanzano and Rick Davis. Jeannie is our Democratic analyst, Bloomberg politics contributor, and political science professor at Iona University. Rick Davis, Republican strategist, partner, Stone Court Capital. Great to see you both here. Jeannie, the narrative this morning was that the markets were feeling relieved because the tariffs, as Bloomberg itself reported would be more targeted. When you start hearing headlines like this coming out of the cabinet meeting, though, from Donald Trump, from Howard Lutnick, does that further confuse the situation?
I don't think so. I think that we have heard this time and time again from Donald Trump and from the administration. I think everybody is well aware of quote unquote Liberation Day. And I think it's sort of like now a wait and see attitude. Does he or doesn't he? And I suspect at some point he will, but it may not be on the second, as Nathan was pointing out, but at some point it may come. And when it comes, as Nathan said, they're very, very hard to turn around and pull off again. So I think people are sort of, playing right now that this is something they're expecting at some point in the near future. And autos and pharma, as you were reporting, is something he's talked an awful lot about in this context.
Is Wall Street projecting today, Rick, or is this reporting from Bloomberg the real news that a lot of these across-the-board tariffs will never, in fact, be implemented, and there'll be a more targeted approach depending on the country?
Well, I feel like it's a little bit of back to the future. In the first administration, we learned that it's not what he says, it's what he does that matters. And it seems like so far, just over a month in, we are actually learning the same lesson all over again. It's don't listen to what he says, let's watch what he actually does. And what he actually does so far on tariffs is significantly less than what he's been saying he's going to do. And sometimes he does what he says. He levies big tariffs on countries that he pulls off 24 hours later, 36 hours later, 48 hours later. And so I think Wall Street's starting to get the hang of it, right? Okay, we know this is going to be a big PR day. This is probably making his base happy. He's going to call it Independence Day, and there's going to be lots of fervor around it. But I think one of the things that's a tell today in this cabinet meeting is Howard Lutnick's, sort of competing with the tariff news that he's going to release this external revenue service. And the fact that they're even bringing that up indicates that they don't have enough to say on tariffs, and they got to have some kind of structural thing. And that will happen. And based on what Lutnick says, it'll happen on April 2nd. So my suspicion is that may lead the news.
Interesting. But you also need tariffs to feed an external revenue service, right, Jeannie? So what's going to happen on Liberation Day, and how are you planning to celebrate?
I don't know if I'll be celebrating it. I will be monitoring it. I don't think, I do think we're going to see some action because, how can you build something up this much and then do nothing? But to Rick's point, I think it might be far less than the rhetoric suggests. And I also think in the context of Howard Lutnick, this is something that we haven't talked a lot about, but he really does need to think about what he is saying on the media. Rick was just talking about this structural change, but he also goes on the air and talks about the fact that elderly people who aren't receiving their Social Security check aren't likely to raise fusses unless they're fraudsters. And how does he know this? Because his mother-in-law wouldn't say anything if she didn't receive her check. I mean, this kind of rhetoric is just built for a Democratic campaign ad. Howard Lutnick's mother is the mother of a billionaire. Of course, she doesn't raise heck when she doesn't get a check from the Social Security Administration. But you know what? The regular folks among us do, and that doesn't mean they're fraudsters. And oh, by the way, does this mean they are cutting Social Security for a limited temporary or long-term period? I mean, so Lutnick has to be very careful, or Donald Trump on his behalf has to be very careful. It's almost like Elon Musk talking about, Social Security as a Ponzi scheme. These guys don't seem to realize the political implications of this kind of very, very loose rhetoric that's going on.
There's quite a bit of talking going on in this meeting. It's hard to tell if there's a heck of a lot of news. Rick and I wonder if, maybe we should be spending a little more attention looking at the other end of Pennsylvania Avenue as lawmakers get back into town and hold some very important meetings, by the way, between House and Senate leadership. The first will take place tomorrow. with, of course, the goal being a massive reconciliation bill that would extend or make permanent the Trump tax cuts, raise the debt ceiling. We've got this at least new range on an X date today from the Bipartisan Policy Center. Is that something closer to what we can actually call news?
It could be. There's a long way to go before we really know how this reconciliation process is going to sort of come to light. We've been kicking around all day today, different times that we think it could come to vote. Lindsey Graham is saying that his bill's going to get done. He hopes before the August recess, which means nothing urgent is happening in the Senate right now on that. And of course, you know, the House leadership is saying something even sooner than that. People are still struggling with how to pay for this. Crapo, who chairs a committee going through this right now, says that, you know, he's just going to call those tax cuts current policy. And when you call it current policy means it goes on forever. It doesn't have to find new funding when it expires at the end of this year. And that's a way to fill a big $5 trillion hole. So there's a lot of talk and not a lot of legislation being written right now. But the reality is, you're right. The other half of Pennsylvania Avenue, where Congress resides, is going to have a significant impact on this first year of Donald Trump's administration, because Donald Trump has insisted they do it that way. Now the question is, can they perform?
Boy, well, there's a lot there, Jeannie, and I don't know to the extent to which we're going to be getting news, to Rick's point, in the near term on Capitol Hill. But Democrats don't seem to know what to do here either. You saw Chuck Schumer doing Sunday morning television, refusing calls to step down. What is the Democratic answer to this process, knowing it might take up the rest of the year?
You know, they don't really have a big voice here. They're going to have to pick and choose their battles. Yeah, Chuck Schumer all over on his book tour, at least on television at this point, and saying he's not going anywhere. And of course, Bernie Sanders and Alexandria Ocasio-Cortez hitting the trail and drawing really, really big audiences. So you see the division. You know, Rick was just talking about the division between Republicans in the House and the Senate. You see a division in the Democratic side between, again, the more moderates and the more progressive wing. And at this point, the energy is on the progressive side, and they are pushing for a fight. Chuck Schumer doesn't want to deliver on a fight, and he doesn't have a lot of power to, but they are really looking for a fight. So I think maybe later in the year, the Democrats, moderates, and progressives will stand together, and they will refuse to work with Republicans. And, you know, we don't know whether that's going to be on the debt ceiling or something else, but there's so much coming up, but their powers are limited. So they're going to have to figure out, how do we move forward? And, you know, their real aim has to be, of course, 2026 in the midterms.
Well, I suspect that we're going to be hearing a bit about this from the president and his cabinet members. Howard Lutnick, aforementioned, Scott Bessent also speaking today in a conversation that we'll bring you a little bit later on from the cabinet room. The Trump administration asking the Supreme Court, Rick, to allow the firing of thousands of probationary workers, an effort that was stopped by a lower court. And we're also seeing another important hearing take place today in Washington, Rick, about whether to allow the deportation of, in this case, Venezuelan detainees who were put on aircraft sent to El Salvador. And we talked about this as well under the Alien Enemies Act. These will resolve likely before reconciliation ever takes place. How important will they be to the policy coming out of this administration?
You know, I think that the latter one has immense impact on the Trump administration's policy regarding deportations. You know, if the Supreme Court rules that they can't use the Alien Enemies Act as a precursor to deporting people without due process, then that's going to take a big chunk out of his aggressive efforts to put people on planes and send them, you know, outside the country. And so I think this is a bit of a gamble. You know, in most administrations, you kind of don't want to let the Supreme Court decide policy for you. So you try and stay within a certain level of activity. that doesn't trigger that. Or if it does trigger it, it's just seen as relatively minor policy disputes, and they tend to side with the administration on administering the laws that are governing us. But in this case, I think that the Supreme Court is going to be setting a lot of policy for the administration, and I don't think they stand a chance of not liking the outcome. So it falls into the category, be careful what you ask for.
There you have it from Rick Davis, Jeannie Shanzano, our signature panel. We'll be back in hour 2 of Balance of Power. I'm Joe Matthew in Washington. Thanks for being with us here on Bloomberg Radio. We'll have much more straight ahead.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
They're back. Welcome to the fastest show in politics. On this fly-in day, lawmakers returning to the Capitol with Trump tax cuts. on the agenda. I'm Joe Matthew alongside Kaylee Lyons. She's back too in Washington. Thanks for being with us on the Monday edition of Balance of Power here on Bloomberg TV and radio. It's time to tackle reconciliation, Kaylee. We've talked about it for months, and it could be months more before this is done.
Yeah, they're still facing a long road to travel down here as they prepare to meet tomorrow at the White House with the likes of Treasury Secretary Scott Bessent on the path forward. Meantime, we're hearing from Scott Bessent, from the Commerce Secretary Howard Lutnick, from others in Trump's cabinet as they're convened as we speak at the White House for a cabinet meeting in which, yes, we have heard a little bit about taxes, specifically the External Revenue Service, which Secretary Lutnick says is launching April 2nd, Reciprocal Tariffs Day. And speaking of tariffs, President Trump also told reporters in the room tape we should have for you shortly that coming soon, auto and pharmaceutical tariffs.
That's right. Soon and shortly were the words we were hearing, not necessarily tied to April 2nd. Liberation Day, I think, is what you were reaching for there. And yeah, the launch of the External Revenue Service. The thing is, Kaylee, if we're going to have an External Revenue Service, we need tariffs to feed it.
Yeah, which raises the question once again as to what tariffs actually will be implemented and when, if not all of them are going into effect April 2nd, which is what our colleague Josh Wingrove reported over the weekend. And that reporting, something markets certainly have been reacting to today.
Pretty remarkable breath of fresh air, kind of a relief rally. We'll see if it lasts beyond this moment. But yeah, that came from a Bloomberg story giving stocks a lift.
All right, so let's check on them now. Charlie Pellet has a look at the movers from New York. Hey, Charlie.
Hi, thank you very much. Welcome back, Kaylee Lyons. You mentioned fly-in day in D.C. These markets are fly-in right now. We have got the Dow, the S&P, NASDAQ all pushing higher. 85-point gain. We're off session highs, but still very close. Back to work Monday with the S&P at 57.52. That is a gain of 1.5%, keeping it all in context. The Dow up 1.1% right now. NASDAQ higher by 351 points. That is an advance of 2%. Your 10-year 4.31%, your 2-year 4.01%. Gold little change now, down $14 the ounce, still above 3,007, and West Texas Intermediate crude up 1.2%, 69.07 a barrel. Risk on Monday, Bitcoin up 3.5% right now, 88,022 on Bitcoin. Back we go to Washington. Balance of Power continues. We got a lot going on, and we got you covered once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much, and thank you for being with us here on the Monday edition of Balance of Power on Bloomberg TV and radio. President Trump speaking right now in a cabinet meeting that Elon Musk is a featured guest at, we understand, and we're going to have part of that conversation for you once it concludes a bit later on this hour as we straddle, as usual, both ends of Pennsylvania Avenue, with lawmakers getting back into town today in a massive project ahead that we've discussed more than once, reconciliation, making permanent or at least extending the Trump tax cuts, lifting the debt ceiling, and what the president likes to call one big, beautiful bill. With an important meeting between House and Senate leaders set for tomorrow, it's a great pleasure to have Congressman Bill Huizenga back with us, the Republican from Michigan's 4th District. Congressman, welcome back to town. It's good to see you. With so much on the table here, I wonder your thought on the approach to writing this legislation and the extent to which the DOGE will be codified in this bill.
Well, good to be back with you, Joe, and hi, Kaylee. And look, there's a lot of work to be done. We know that. I'm glad to see these steps being taken by House leadership, Senate leadership. We're going to have to reach consensus. And yes, the one big beautiful bill would be the preference of the House. I think here's the why. There's a lot of us that are just questioning whether there's going to be a true second bite at the apple. And that means capturing both the essence of what DOGE is trying to do, which is to streamline and drive efficiencies into government, which it desperately needs, as well as making sure that we capitalize on this opportunity to make sure that there isn't a 22% increase in taxes for the average American family. I mean, despite all the Democrats, caterwauling about billionaires and millionaires and how this is going to be helping them, the simple fact is that with this expires, you're going to see 22% increase in taxes for those families. You're going to see small businesses hurt dramatically. NFIB says this is going to be a dramatic impact on their members. So we've got to go and get this done.
Well, one of the differences between the House and Senate's propositions on this, Congressman, is that the House bill includes a raising of the debt ceiling. Considering we just got an estimate from the Bipartisan Policy Center out with a guess on the X date when we would theoretically default on our debt between mid-July and October, knowing the deadline to extend the 2017 tax cuts isn't really until year end. Do you foresee that the debt ceiling fight is going to have to be separated, maybe so that you can grab some Democratic votes along the way?
That's a good question. I mean, that's a matter of strategy, frankly, as we're moving through this. It's going to need to happen. And, you know, this is what I always say to folks who say, oh, well, we don't need a debt ceiling, or yes, we cannot give this up. You have to look at what the purpose of the debt ceiling vote was. And it was to bring attention to a serious issue, a growing issue, and then it was to curb behavior. Well, I'm not sure people have really been paying attention as we've driven this up to $36 trillion in debt. And you have to ask yourself whether this is really curbed behavior. So what I'm pushing for is let's make sure that we have something in place that is a catalyst for the conversation. Clearly, purely a debt ceiling election or a debt ceiling vote hasn't been doing the job, in my opinion. So what is it that we're going to put in place? So, but I think we need to have something to drive that conversation. So it's going to be one of those points of debate and certainly a negotiation. But we know that the president wants this off his plate as well, and so I think he'll have a compelling argument when it comes to the Senate leadership.
I'm sure you've been watching and listening to a difficult conversation on the other side of the aisle from your purge congressman, with a lot of angry Democrats following the debate over the CR and Chuck Schumer's eventual decision to back it. He was sticking up for himself on Sunday morning, still fending off calls for him to step down. I don't know if this is going to be a purely Republican exercise. It is reconciliation. You have every right for it to be. I just wonder if Democrats should be or will be involved in the ground floor talks that are getting started now.
Well, those are two things. Should be and will be are very, very different around here. You know, we should have had every Democrat that's ever complained about a potential government shutdown on that CR, but they didn't, and it begs the question, which is why. And I think the obvious answer to that is politics. And look, if the Democrats want to trot Bernie Sanders and AOC out and do a nationwide, arena tour, knock yourself out. Yes, you were getting some big crowds, but I do not believe that is where most of America is. And that is going to be problematic, I think, for them on their side of this equation. But nonetheless, we're going to need to work through this on the reconciliation side, and we might see a few of those more clear-eyed, clear-minded Democrat colleagues come across and say, look, this really is our best opportunity. And if we're going to see 40 million families have their per-child tax credit cut in half, that's an impact. That's not a Republican issue. That's not a Democrat issue. That's not a red state, blue state issue. That's a family issue that is going to impact the checkbook of many, many families sitting around the kitchen table trying to figure out how do they afford gas and groceries and school supplies and all the other stuff, much less take a vacation or anything else. So that I think is going to be the essence of this.
Well, something else that could affect the checkbook of American families, Congressman, is if the cost of goods is effectively risen, at least for some of them, due to tariffs that are either in place now or the president has threatened to put in place further. We just heard from him in a cabinet meeting saying he'll be announcing car tariffs shortly, pharma at some point. But we've also had our own reporting internally here at Bloomberg that on April 2nd, he's actually looking at something a bit more pared back than the sweeping tariffs he's been talking about. What is your hope here on the actual outcome? What level of tariffs and on what goods is actually appropriate to achieve his objectives without hurting that checkbook you were just speaking about?
Yeah. Well, Kaylee, I always bring up to people who might be sitting in these chairs behind me here in my office wanting to discuss all this. You have to look at what is policy and what's tactic, right? And I think we've seen more tactic than actual policy numbers, hard numbers, out of the president so far, and good for him. Here's his goal and objective: drive as much business back into the United States as physically possible to make sure that we've got good paying jobs here in the United States. that we are taking care of our citizens first and foremost, and that we've got a robust economy. And the fundamentals of the economy are sound, especially when we're talking about making sure that energy policy is rational, not what we've had for the last 4 years. Making sure that we are putting those Tax Cuts and Jobs Act provisions back in place. Making sure that we have a efficiency and a paring down of federal government and government, frankly, at all levels that has hindered growth. So yes, tariffs is going to be a part of that. I know that the Swiss and others that are dealing with pharmaceuticals have wanted to make sure that they are working with the administration. You happen to bring those up. Michigan, we've got a tremendous number of automotive suppliers, tier 1, tier 2, tier 3 automotive suppliers. A lot of them are looking at how they bring this back to the United States, if at all possible. It's interesting that the United Auto Workers are in support of the tariffs. The Canadian auto workers are not. That is, the union that's usually together is actually split on this one. So there's going to be some bumpy bumps in this road. There's no doubt. But I think we have to look at what that end game is, and that's to make America stronger, more prosperous, and stronger on the world stage. And I think President Trump is absolutely doing that.
Well, when we consider the concept of reshoring, whether it's the auto industry you mentioned or high tech, whether it's chips or pursuing AI, you need energy for all of that, Congressman. And I want to ask you about this nuclear plant in your backyard that's being relit with help from a grant from this White House, the Palisades nuclear generating station. If this thing is repaired and gets back online, is that for the better of your grid in your district, or are you going to be announcing a deal with a hyperscaler at some point that's going to park a data center next to that plant?
Well, the way we have energy that's crossing around in the Midwest is the MISO, and we need to have a grid that is robust. Palisades was actually taken offline and decommissioned. This is the first recommissioning of one of those plants. 3 Mile Island is being discussed about, another one out in Iowa. And this is a $56 million loan guarantee that's part of a larger package that I was glad to see went from the Biden administration, and I want to say thanks to Secretary Wright and President Trump for pushing this through as well, making sure that it's happening. Because at the end of the day, if it is about energy independence and making sure that we've got the ability to power our economic recovery, that's not just traditional oil and gas. This is making sure that we have nuclear available and developing those small modular reactors, SMRs, and you might see those surrounding this because you've got the grid in place, so you don't have all the delay and permitting and a lot of those things. So this is good not just for Southwest Michigan or Michigan. This is good for the country, and we've got to figure out if this is a very viable way of repowering ourselves. And I'm glad to see it happening in Southwest Michigan.
Well, that's a domestic nuclear power plant, Congressman. I'd also like to ask you, given your seat on the Foreign Affairs Committee, about nuclear power plant or potentially plants, plural, abroad in Ukraine or areas of Ukraine currently occupied by Russia. President Trump, during the cabinet meeting, talking with Ukraine about nuclear power plant ownership. We know Zaporizhia has come up in conversations with President Zelensky. We also heard from Secretary of State Marco Rubio during this cabinet meeting that there is no military solution to the Russia-Ukraine war. As you hear the words coming from the administration, track the efforts toward peace that are underway and what you're hearing on the committee, where do you think this goes from here? What does the U.S. end up with and Ukraine and Russia end up with?
Well, that's part of the negotiations, and certainly this the mineral agreement was a big step of that. I know the president played some hardball on that, and he should have. I'm glad he did. I thought it was out of bounds what President Zelensky had done, and now that will drive hopefully an understanding and an agreement between our two countries. Exact same thing could be happening with the nuclear power plants. And of course, those are more unique in that they're not just inert, right? They have to be actively taken care of. They have to be tended to. They have to be utilized. And if you don't, or you bomb them or do something terrible like that, there's real consequences to that. So it's beneficial, I think, for Ukraine to have involvement of the United States, whether it's U.S. government or U.S. companies that are involved and engaged in that. And I think we can get there. I really do. And I think Secretary Rubio is right. After we've seen billions of dollars getting poured in to Ukraine and that conflict, they're at kind of a stalemate. Now, the Ukrainians have to figure out what exactly is that going to mean. But let's all remember, 20% of the country of Georgia next to Crimea is under Russian occupation. Crimea came under occupation during the Obama administration. Joe Biden called it a small incursion, a minor incursion, when Russia initially came in a couple of years ago. So at this point, we've got to come up with a solution. It's costing millions of lives. I want to make sure that there's no U.S. lives, but I don't want to see any lives getting lost over this. So I'm glad to see President Trump and President Zelensky and Putin having the conversations that they need. And I'm thankful to, frankly, the Saudis for hosting a lot of that conversation, whether it's both in Gaza and Israel, but as well as this Russia and Ukraine problem.
All right, Congressman, thank you so much for your time. That's Republican Congressman Bill Huizenga of Michigan joining us live here on Balance of Power on Bloomberg TV and radio, both on the issue of Ukraine, but also pressing issues here in Washington as Congress makes its return to Capitol Hill. And some congressional leaders get set to meet with administration officials tomorrow on the path forward of reconciliation, which we were just discussing with the congressman. So on that note, we assemble our signature political panel. Rick Davis is with us, Stone Court Capital partner and Republican strategist, alongside Democratic analyst Jeannie Sheehan Zaino, senior Democracy Fellow at the Center for the Study of the Presidency and Congress. Rick, first to you, as we assumably will get some headlines out of the meeting that takes place tomorrow. We've already seen a few like them as they try to chart the way forward on tax policy. Is this so much about what the policy itself actually looks like, or what a realistic timeline is for the policy becoming law? Because they're setting some deadlines that are coming up pretty quickly here.
Yeah, look, I mean, the real big deadline is the end of September of this year when those tax breaks lose effect. And as the congressman just mentioned, nothing would be worse for the American public than to have one of the largest tax cuts in history go into effect, October 1st. So everyone's working against that deadline. And there are a lot of things that get in the way, procedures and costing out. And the difference between the House bill and the Senate bill are all going to have to be reconciled before that. And there'll be enormous pressure to dial that forward to before the August recess. As Lindsey Graham has said, he's got to get this Senate package done on reconciliation with all these tax cuts and all the other material aspects of the budget done by then. And that's just on this year's plan. Remember, all these Senate and House appropriations committees are meeting to pass 12 different administration department budgets before the end of September for this year's or next year's budget, which, of course, they didn't do last year, and we've been living under a continuing resolution. So there's an enormous amount of work to be done, and I think that it'll be interesting to see just how much this House and Senate are able to work together, even though they're in the same party.
Rick Davis, Jeannie Sheehan Zaino, our signature panel, as we now bring you into Donald Trump's cabinet meeting. We just got our hands on this video from the White House. Let's listen to President Trump with the cabinet on Bloomberg TV and radio.
Billions of dollars. They said thank you very much. It was no incentive for them to use it. But what is good is the tariffs will make it so that they want to come back. That's why they're coming back. I think they're coming back because of the election that took place on November 5th and because of the fact that they have to come back because the tariffs are forcing them to come back. And remember, there are no tariffs if you build here, and that's a big factor. So we have record numbers. Howard was just telling me the numbers that we're talking about are crazy, beyond anybody's wildest expectation. So they'll be doing a lot of building, all sorts of businesses, including the basics of automobiles. We have, as you know, Honda is coming in with a massive plant to Indiana, but there are many plants that are happening, and literally some are started already. General Motors is already redoing plants that were half abandoned, or they have plants that weren't being fully utilized. They're going to be they and others are going to be making parts and other things in those plants so that it's one-stop shopping finally. It's ridiculous. You had to go to Mexico, you had to go to Canada, a car went all over the place. It was like, I don't know how that would have worked, but that's the way it sort of ended up. We had a deal, and we have a deal, it's fine, but people took advantage of the deal. They cheated. And when you cheat, the deals are unfortunate. But now what's happening is the numbers are beyond our wildest expectations. Now, having to do with cutting, we've done a lot of cutting from people, ideally the people that aren't doing the job. In many cases, people weren't attending jobs. In some cases, in many cases, people didn't exist. They had on the government rolls people that don't even exist. But of the ones that did exist, as you know, many didn't come to work. Many had no intention of coming to work. Many were paid and working someplace else. There were lots of bad scenarios, but they're being weeded out, and I think we're probably ahead of schedule on that. And to me, something that was just terrible is the contracts that we're finding, the fraudulent contracts that we're finding where millions and millions of dollars and even billions of dollars in some cases were given out. And I think we'll start with that. I'd like to start with Doug Burgum, Secretary of the Interior. He told us about a couple of contracts that we have now found. When he got there, they saw this with Chris and everybody, and they couldn't believe it. Doug, could you just relate what you told us a little while ago?
No, happy to, Mr. President. There's a federal consulting group, which was a group inside of Interior, but it was managing contracts from many different agencies that flowed through here. One of those contracts was to do surveys of individuals, $830 million for surveys. And so part of the question was, hey, could we actually see the surveys? And then the surveys came back, and a survey was like 8.5 by 11 sheet of paper with 10 questions that anyone's child in junior high could have put together, or AI could have done for free. $830 million. So that's one that we've stopped. And that contract was going out after you were inaugurated, sir. So it was
so
jumping.
It's a pure fraud.
Yeah.
It's a fraud. But we've had many fraudulent contracts that were caught by the work that Elon and his people are doing, and working with our people. It's been brought to light. The fraud, not just waste and abuse, the fraud has been incredible. You mentioned one, Madam Secretary.
Well, yes, sir. Well, let me just add to that, and thank you. We just had a wonderful cabinet meeting, all aligned on certainly the effort to realign the government. But even at the U.S. Department of Agriculture, we've canceled a $300,000 contract educating on food justice for queer and transgender farmers in San Francisco. A similar contract we canceled in New York, again, educating transgender and queer farmers on food justice and food equality. I'm not even sure what that means, but apparently the last administration wanted to put our taxpayer dollars towards that. We canceled a $600,000 contract out of Louisiana that was studying the menstrual cycles of transgender men, a $600,000 contract. We canceled another contract out of a university in the middle of the country that focused on getting more diversity, equity, and inclusion into our pest management industry. Again, these are nonsensical. It makes zero sense to use taxpayer dollars to fund these. I know these are just a few examples of the hundreds and hundreds that we have found.
Well, a clear case of fraud was with the Small Business Administration, where they were handing out loans, $330 million worth of loans to people under the age of 11. I think the youngest, Kelly, was a 9-month-old who got a $100,000 loan. That's a very precocious baby we're talking about here.
We're tackling the fraud, waste, and abuse in the agency. We've seen, hundreds of billions of dollars of fraud go unprosecuted, so we're taking that on. We have a zero-tolerance policy for fraud, and we continue to crack down on it and make sure people are held accountable.
It's amazing. And you have a lot of that. You found far too much of it. It's a pure fraud. We like to use the words waste and abuse because they sort of sound good, but many of these things are pure fraud. Now, there was a contract that you've heard about where Stacey Abrams got $2 billion just before we took over, and it was a rush to get her the money, and that was environmental, and nobody knows what she was doing. but 2 billion. If you got 2 million, that's a lot. If you got 200,000, that's a lot. But this was $2 billion was given. Lee, do you want to talk about that? And the other one that was even worse?
EPA has now canceled over $22 billion worth of contracts. $2 billion going to this NGO that Stacey Abrams was tied to. They received only $100 in 2023. And then the Biden administration gave them $2 billion. The director of the Greenhouse Gas Reduction Fund saw his former employer get $5 billion. So $20 billion went to just 8 NGOs, and they're all pass-throughs. And then they were giving it to other entities, many of them were pass-throughs. And what you have is all these extra middlemen, they're taking their cut. And the taxpayer ends up getting screwed. They're losing out on all this hard-earned money. They can't afford to have the federal government waste. The partnership with Doge and Elon Musk has been incredible at EPA. Their team is very talented. We wouldn't have been able to do it without them. And of course, this mandate from President Trump to make sure that we identify every last penny, whether we're saving $50,000, $5 million, or $22 billion. We will not rest until every last penny is saved. Thank you, Mr. President, for the opportunity to do this for the American public.
Thank you. Great job, you did. So we have a lot of that. We're getting down to a point we think probably over the next 2 or 3 months we'll be pretty much satisfied with the people that are working hard and want to be members of the administration and our country, really. And they're doing a lot of good people. We have a lot of great people. We want to keep the good ones, and we want to get rid of the ones that don't exist, and we want to get rid of the ones that do exist but don't work. And we have quite a few of them. Would anybody else like to say something before we take some questions from the press, please? Doug Collins.
Yes, Mr. President, I think one of the things that you've always told me is take care of our veterans, and that's what we're doing at the VA. And one of the things, though, is you also have to know who your employees are. You have to know the very fact of who you are. We're 470,000 roughly when we started this, larger than the active duty Army, when you think about that in the perspective. But however, this is an interesting point. When I first got there and we started looking at this, how you take care of people, we didn't have an HR system that could actually give us a rundown on who actually was working where. That we've had to work with that, working with our VA employees who are those liaisons. We've been able to put together an organizational chart which we can start looking at that. But the interesting part about it is about taking care of veterans, and what you've told me to do is how do we get the people in the right places. And I think when we look at this, GAO has told us we were high risk for years. The previous administration put literally tens of billions of dollars in tens of thousand employees over the last 4 years, and we saw our statistics basically stay the same or go down. Backlogs went up. Maybe the question is not money and employees anymore. Maybe it's the organization and how we effectively deliver for the American people. That's what we're going to do.
Well said.
And one thing I want to add to it, it is not necessarily a very popular thing to do. You're talking about employment, you're talking about people and the lives of people. And yet, I think the American public understands we're trying to save our country and make our country great again. I mean, you could say it, but we're trying to save our country from this extraordinary thing that was happening. What they were doing to our country was just a horrible thing. And I have no idea how it plays out in the public. I guess you see poll numbers that are very good numbers, but I don't know what that means long term. But it's something that has to be done. If we don't do it, we're not going to have much of a country left, so we have to do it. So we're doing things that I think a lot of presidents wouldn't be inclined to do, but we're doing it to really, I don't want to use cliche. I don't want to say we're doing it to make America great again, because I say that on the campaign trail, but there's really no other words that could express it better than that. We're doing it to help our country, and our country was riddled with fat, like no country probably anywhere in the world, and we're getting rid of the fat. And at the same time, we're going to be bringing in millions of very good, high-paying jobs, and we're going to be taking in a lot of money. Our country's going to be very strong. We've been ripped off by every country in the world, friend and foe. We were taken advantage of like nobody's ever seen. And you saw what happened today with Venezuela. We did something with Venezuela, which is long in the making, and it's very substantial. And we'll be announcing cars very shortly, and we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country. And if we have problems like wars or anything else, we need steel, we need pharmaceuticals, we need aluminum, we need a lot of these things that we sort of don't make anymore, and yet we're equipped to do it all. So we'll be announcing some of these things in the very near future, not the long future, the very near future. And it'll bring in billions of dollars, billions and billions, and it'll bring in, maybe more importantly, jobs. It'll protect the jobs we have, and it's going to be really, really quite amazing. Chris, did you have something to say?
Yes, President Trump announcing that shortly or soon more tariffs could be coming on sectors such as auto and pharmaceuticals, also alluding to his True Social post from earlier today on Venezuela, threatening a 25% tariff on countries that import Venezuelan oil and gas. Of course, those continued tariff threats, other subjects we heard the cabinet discussing, including efforts to trim down the federal government tax policy as well, all of it feeding into the economic outlook. And we get the view on the economic outlook from the White House now with the chair of the Council of Economic Advisors, Stephen Miron, sitting down here in our Washington, D.C. studio with our colleague, Bloomberg's Saleha Mohsin. Saleha?
Thank you so much, Kaylee. We have Stephen Miron here with us. Stephen, you are one of the top economists at the White House right now. Welcome to Bloomberg. You're serving in this role at a tenuous moment for the economy. We saw last week the Federal Reserve officials there cut economic growth outlook, also citing inflationary risks, mostly from Trump's trade policy. And I want to know, do you think that the Fed has gotten the effects of tariffs on the economy wrong?
Thanks, Saleha. It's great to be here, so thanks for having me. Look, yeah, I think that a lot of folks, have got the effects of tariffs wrong. I think there's quite a bit that people miss about tariffs. The number one point that I'd make about tariffs is a general point about economics, which is that when you think about any economic policy, a tariff, a tax, anything else, right, the economists believe that the party that bears the burden or the benefit of that policy is the party that's more inflexible. Because if you're flexible, you can change your behavior to avoid the costs. And so think about it this way. If you were buying a house and, the town that you're looking at raises property taxes, right? You say, okay, maybe I'm going to look at the next house in the next town over, right? So you can adjust your behavior, you're flexible. Whereas the seller of that house is inflexible. They already own it. So they have to drop their selling price, right? So in this example, economists would say, okay, the seller of the house ends up bearing the increase in the property tax. And you have to think about tariffs the same way. U.S. consumers are flexible. We have options. We can produce stuff at home. We have a variety of countries we can import stuff. We can substitute into home production. Whereas countries that sell to the United States are inflexible. They've only got the United States to sell to. There's no alternative. So they're the ones who will bear the burden of these tariffs, which means that there's going to be very limited pass-through into downside economic risk or into higher prices. So I think that a lot of folks have got that wrong.
But even Trump and his advisors, including your colleagues, Elon Musk, Scott Bessent, the Treasury Secretary, and others, are signaling a no pain, no gain concept here, that for a little while, things could get bumpy in the economy.
Yeah, so there are some risks in the economy, but I think those risks predominantly derive from the transition from an economy which was primarily government-driven to an economy that's primarily private sector-driven, and that might contribute to make things bumpier and less robust in the short run. And just to give you one number that's a great example of that is if you look at the share of jobs created in 2023 and 2024, so the second half of the Biden administration, when COVID is over, and it's really just a result of Biden administration policies, 73% of all jobs created in those 2 years were due to government and government-adjacent sectors. By government-adjacent, I mean sectors like education, sectors like healthcare, social assistance. These are sectors of the economy that derive a very large, or maybe even in some of them the majority of their financing ultimately from the taxpayer through direct transfers or subsidies. So 3/4 of jobs created in the last couple of years came from basically, sort of government expenditures and taxpayer subsidies. So it is a brittle economy as we transition away from that to the private sector.
But the Fed and Fed officials are correct then that there will be at least short-term pain as tariffs kick in.
So I don't think that there's going to be material short-term pain from the tariffs. I think the short-term pain is coming from the reorientation of the economy from the government to the private sector. Now, of course, as you know, the tariff situation is still developing, and the president will decide what he wants to. The president will decide what the tariffs are on April 2nd, and has been very clear telegraphing that.
Let's talk about the tariffs. What's coming down April 2nd? The president has tasked his advisors and his team with an immense job here to come up with these tariffs for next week. What can you share about the contours of this? Should we expect country-by-country tariffs, sectoral tariffs being announced?
Sure. So, look, it's important to calculate a whole variety of things when you're thinking about when you're thinking about fair and reciprocal tariffs. Those include outright tariff rates that other countries charge us, and they also include non-tariff barriers, right? Ways that countries prevent us selling our exports into their markets through means other than tariffs, through not opening their markets, through intellectual property theft or lack of enforcement, through currency changes, through regulatory differences that prohibit our products from entering their markets. And you have to consider this entire host of things, right? And so the dimensions of analysis can get really big really fast. Now, that goes at odds with another principle, which is that simplicity is great, right? And so simplicity is a virtue when you think about these things in one sense, because it makes it more difficult for other countries to game. Now, the situation is developing. The team and the president are entertaining options. It would be wrong for me to get ahead of that, but we'll find out soon.
Stephen, the other thing that a lot of people here at Bloomberg have been talking about is this paper that you wrote in November, after elections, but before you were nominated to be CEA chair. The title of this paper was A User's Guide to Restructuring the Global Trading System, and it has caused a stir. You talk about some unorthodox policies like revaluing U.S. gold stocks, applying a user fee to treasuries, and a new global currency accord. Can you tell me how much of this is in the works now?
Yeah, so I'm glad you brought that up, because this paper seems to have taken on a life of its own against all my intents. Look, I'm pretty clear in that paper that it's a catalog of available options, and it's a recipe book, and I'm trying to evaluate how useful or not useful or easy or difficult those various recipes are to make. Some of them are easy, some are tough, some are some are filling, satisfying meals, and some will leave you hungry again in a half an hour. And my goal in that paper was to provide an evaluation of options, that a cost-benefit analysis of risks and rewards, so that whoever was making the decision, sort of could have that available if helpful. To be clear, I'm not the chef, right? The president is the chef, and he's been very clear that he's focused on fair and reciprocal tariffs. He couldn't be clearer. And so anybody who's thinking that something that I included in a catalog in November is the source of is what the policy agenda is now, I think that's wrong.
So tell me, a currency accord, a Mar-a-Lago accord, is that currently in the works?
The president's been very clear that he's focused on fair and reciprocal tariffs, and that's what the team is working on.
Is it a 2026 goal to do a currency pact?
I mean, look, I would look at it this way. I would look at it as the United States has been running very significant trade and current account deficits for a very long period of time. Those are very costly to us economically. They're very costly disproportionately costly to some parts of the country that are reliant on manufacturing, reliant on exports. And there's a variety of means of trying to address that problem, right? The president's been very clear that he wants to start with tariffs. And that's what we're doing, right? We are starting with tariffs. We have been moving in tariffs. We are going to continue moving on tariffs. April 2nd is around the corner, and that's the sole focus right now. Could it be something that is entertained down the road? Sure, it could, but right now the president is focused on tariffs.
In the paper, you talk about an overvalued dollar. Is that still the case?
Look, another thing that I think most of the economics profession gets wrong about tariffs is that all of these models of international trade all assume that trade eventually balances, and that if you run a trade deficit, the dollar will weaken, and that will restore the trade deficit to balance. If you run a trade surplus, the dollar will strengthen, and that will restore the trade surplus to balance. And so, therefore, the currency will adjust to balance trade over time, and there's no need for tariffs because the economy is basically self-adjusting, self-equilibrating, as an economist would say. However, it seems very clear that that's not the case. We've been running current account deficits for 5 decades now, and they only get worse in dollar terms and percentage terms lately. So, I think it's very clear that that standard model of the economy that assumes away the need for tariffs is wrong, because we have been running those persistent current account and trade deficits. If the dollar were able to weaken to equilibrate trade, then we wouldn't have a lot of to balance trade deficits, then we wouldn't have a lot of the problems that tariffs and other policies are designed to address, because U.S. exports would be more competitive on the global stage, and we wouldn't be as cheated by other countries.
Trump has talked a lot about maintaining the dollar as the world's reserve asset, but also there's a desire for a weaker exchange rate. Aren't these dueling forces?
So there's a variety of means which you can take to try to address the problems in demand, which the allocation of demand across countries, which leads to the persistent trade deficits that we have in the United States and that we have had for decades in the United States. There are various means of doing so, right? Some of these means go down different paths, right? And some of these means would be dollar positive. Some of these means would be dollar negative. And the point of the essay that I wrote in November was to evaluate the variety of paths. And just because there are many ways to get to an end result doesn't mean you want to take all the paths at once. I mean, you can't cut yourself in half.
All right. Well, thank you so much for joining, Steve. Lovely to have you. Joe and Kaylee, back to you.
Thank you.
So, thank you so much for a fascinating conversation. And, of course, plays right into what we're seeing today in the markets. We do want to update Wall Street ahead of our conversation that Michael McKee is going to be bringing us with Raphael Bostic of the Federal Reserve Bank of Atlanta. Bit of a relief rally with news on tariffs today via Bloomberg. Let's bring in Charlie Pellet from World Headquarters in New York. Charlie, how's it looking?
Hi, thank you very much. Right now, Joe Matthew, we are looking at gains for the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 index. Stocks are ripping higher. Right now, we have got the S&P 500 index up 87. That is a gain of 1.5%. Dow Jones Industrial Average up 484 now, up by 1.1%. The NASDAQ Composite Index is surging 357. For that index, a gain right now of 2%. The Russell 2000 Index doing a little bit better, up by 2.1%. Your 10-year, 4.33%, with the 2-year currently yielding 4.02%. Gold down 0.5%, 3,007 the ounce, and West Texas Intermediate crude up 1.1%, 69.03 on WTI. Risk on for Bitcoin up now by 3.9%. Bitcoin at 88,444 on Bitcoin. So the Dow, the S&P, NASDAQ, they are all advancing, and again the S&P, while off session highs, still showing a solid advance. Meanwhile, President Trump is threatening a 25% tariff on any nation buying oil and gas from Venezuela, ratcheting up his dispute with the Latin American country over immigration, with a move that risks roiling the global energy trade. Again, crude oil is pushing higher right now, WTI up by 1.1%. And a new owner for Dun & Bradstreet, Clear Lake Capital Group has agreed to acquire D&B in a deal that values one of Wall Street's oldest data and analytics providers at $4.1 billion. Dun & Bradstreet up now by 2.9%. Bloomberg LP, parent of Bloomberg Radio, competes with Dun & Bradstreet in providing financial information. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Lots going on. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, we continue to keep track of the news on tariffs, which of course is in part moving markets today, but also other news we heard out of President Trump's meeting with his cabinet that took place at the White House a short time ago. Reporters being let into the room for some of that for a bit of a Q&A session, which included questions around interest rates. Something that President Trump obviously has not been shy to weigh in on. He did so once again, saying that he hopes the Fed lowers interest rates. He would like to see it, although he did say that's his opinion.
Even as the Treasury Secretary goes on his own mission to lower yields on treasuries, this is something that we've been talking about quite a bit around here in Kaylee as we talk about the idea of inflation coming against the backdrop of this tariff relief rally. A pretty well-timed conversation that our colleague Michael McKee brings us right now, live from Atlanta. Raphael Bostic, president of the Federal Reserve Bank of Atlanta, sitting down with Mr. McKee right now live on Bloomberg. Michael?
Well, thanks very much, and we'd like to thank Raphael Bostic for joining us here on Bloomberg Television and Radio Worldwide. They were just talking about how the president came out a short time ago and said the Fed should lower interest rates. When he talks, do you listen?
Well, we hear lots of voices. I would say my job is really to talk within the 6th District and see where policy should go based on what I'm hearing in terms of the momentum of the economy. And today, what I would say is there's a lot of uncertainty. Forecasting is maybe a bit more challenging than it's been in the past. But look, I stay on my job to just talk to the business folks that we see and hear from them to understand sort of what's happening on the ground. And that really is the thing that informs me very much.
Well, this is the part where I'm normally going to try to pry out of you some sort of guidance on future interest rate moves. But when you look at the summary of economic projections, the dot plot from last week, one gets the impression that you don't really have a clue at this point.
Well, you know, what we've heard and what I've heard is that we don't really know where the economy is going to go. Business leaders don't know, families don't know, and local policymakers don't know either. So one of the things that really has impressed upon me is the idea that people are taking on board information as it occurs. What they're hearing are things that are leading to expectations that there'll be upward pressure on prices, so that inflation will happen longer. And I've taken that on board. So my projection of where inflation is going to go this year is pretty much sideways. And we won't get back to a more neutral level of inflation, our 2% target, I don't project until sometime early in 2027. But it is very much hearing people, take in the latest news, figure out what that means for them, and then I will respond to that in terms of how I think about the economy's trajectory and policy.
Last month you said you thought that we would have 2 rate cuts this year. The dot plot didn't change, still calling for 2 rate cuts, but a number of people moved their dots up to say maybe we get fewer than that. Were you one of those?
I was one of those. So I was at 2, I moved to 1, mainly because I think we're going to see inflation be very bumpy and not move dramatically and in a clear way to the 2% target. Because that's being pushed back, you know, I think the appropriate path for policy is also going to have to be pushed back in getting us to that neutral level.
Well, some of your colleagues also moved their dots down, suggesting that we might see more rate cuts, probably because they think the economy will weaken. What do you think the odds of an economy weakening because of fiscal policies are?
Well, what I would say is I am hearing more concerns about the trajectory of the economy. That's undoubted. But what I also will say is the data that's come in to date has not actually shown that, and we've still seen a resilient economy. I do know that consumer sentiment has started to take a dip, and the question that we face right now is consumer sentiment going to be a leading indicator like it was pre-pandemic, or is it going to be something that doesn't really translate into actual observed behavior in the economy as how it played out for most of the pandemic? Right now, it's an open question, and it's one of the things I'm going to be watching very closely in the months to come.
Well, it's hard to know for sure what consumers are going to do, but you talk to business leaders all the time. What's the general attitude of CEOs right now about business outlook and about their plans for, say, hiring or even raising prices?
So, you know, we actually have started to ask our business leaders exactly this question. Where do you think pricing pressures are going to go, higher or lower? What we've heard consistently is they think they're going to go higher. Then we ask, what do they think is going to happen in terms of their sales? And they're also quite bullish on the sales rising as well, which says to me they think that consumers are going to be able to manage these higher levels of prices and whatever changes in prices that happen moving forward. We'll have to see if that actually plays out. I think that would be one of the big questions and stories that emerges through the course of 2025, namely how the consumer manages in the face of these elevated price levels.
Well, if companies are saying prices are going to go up, are they going to pass that along if tariffs come on and add to the cost of their materials?
Well, we've done surveys to ask this question as well, and what we've gotten in survey responses is yes, they're expecting to try to pass these through. The expectations about unit price costs going up is clear, but if you look at in our surveys about what they're expecting for price changes, the amount of price change they're expecting almost matches the cost change 1 for 1, which says a complete pass-through is the expectation. And then again, we'll have to see what happens in terms of whether consumers take that on board.
What are they telling you about the labor market and their plans for employment going forward?
Well, labor markets, they're still tight. Not as tight as they were 2 years ago, but what we hear from most businesses is that's not a source of worry for them. They feel like if they need workers, they'll be able to get them, and that wage pressures are not really outsized relative to where they were pre-pandemic. So folks are feeling pretty good about the prospects in terms of workers.
Border crossings are way down, and deportations are supposedly ramping up. What do you hear from the service industries about their abilities, or even construction, to find workers?
Well, we haven't been hearing this as an across-the-board thing, but we are hearing from particular sectors that there is a shortage that's starting to emerge in terms of work crews on housing construction sites and the like. We're just going to have to watch to see if that remains isolated or whether it becomes something that is more widespread, which then will have implications for the ability of the economy to meet the demand that's out there.
You were talking about consumer sentiment. What do you make of the rise in inflation expectations, which, at least in the Michigan survey, has been fairly dramatic?
Well, as you know, for many, many years, short-run inflation expectations have really matched where people are. And I think seeing the elevated prices, hearing the talk about the tariffs, and hear the idea that tariffs push up prices, I think has shaped people's expectations in the short run. It's the medium and the longer term that I'm trying to focus on much more. The reaction has been far less dramatic, but to the extent that that starts creeping up, that'll be something that I'll have to worry about.
Well, there was a lot of pearl clutching on Wall Street when Chairman Powell suggested that the impact of tariffs on inflation would be transitory. Would you use that characterization?
Well, I try not to use that word anymore. I will just say that. But I do think, look, we have to acknowledge that historically, when tariffs have played out, there's been a one-time jump in prices, and then the economy's returned to its usual trajectory, such that policy doesn't have to respond to it. For me, I think there is a question about whether that's going to happen this time. We've just gone through a period of elevated inflation, so it is very much on the consumer's mind. And I fear that they might be more sensitive to higher prices today than they have been in the past, but they might not. And we'll just have to see how that plays out.
Well, this whole question of seeing how it plays out, given how we're getting government by tweet and things change all the time, are you sort of foreclosed from acting preemptively? Are you going to be necessarily behind the curve?
I don't think we're going to be behind the curve, mainly because we know we're waiting. And so from my perspective, the longer you have to wait, that means your actions when you decide that it's clear where the economy is going are going to have to be larger than they would be otherwise. So I would say we don't want to it's not in our interest to move in one direction, find out that the economy is going a different way, and then have to undo that. I'd much rather take the time, make sure that when we act, it's acting appropriately to where the economy is, and we can make sure that we stay close to our dual mandate objectives.
Now, you produced the GDP Now number from the Atlanta Fed. It's gotten a lot of publicity lately.
Yes, it has.
Not for its cheery news, but even adjusted for gold, it's sort of unchanged, which is a big drop from the growth rates we've seen. Do you think we're in the midst of a real slowdown, or was this just sort of a temporary dip at the beginning of the first quarter?
Well, we'll have to see. You know, GDP Now is a nowcast, so it takes data as it comes in through the course of the quarter. What I would say is the drop from the 2.2% down to anywhere from 0 to 0.5% is a sign that suite of data, that set of data that came in, is suggesting slowdown. We'll have to see what that looks like for the end of the quarter. I will say most businesses I'm talking to aren't reporting to me that they're seeing that kind of a slowdown, so we'll just have to wait and see what happens.
Well, if the economy slows a lot, which would suggest maybe that lower rates are needed, but inflation hasn't come down to 2%, and you want to have higher rates to quell inflation, if you have that sort of stagflation, which do you choose to act on?
Well, I'm not jumping to stagflation yet, so I'm just going to say that. But I've been saying for a long time, it is paramount that we get inflation back to our 2% target. That's the thing that I'm laser focused on. To the extent that the labor market and the economy does weaken, and we're not seeing that now, I'll have to manage that when that happens. But right now, it is let's get inflation back to 2%. That's one of the reasons why I've been comfortable keeping our policy in a restrictive stance, to make sure that we are trying to push that target and that measure to the number that we're trying to get it to.
If I could say this politely, one of the constants with the Fed's forecasts about inflation is that you keep pushing out the time frame for getting to 2%. what's keeping inflation sticky at this point, and what should we look for to see a sign that it is actually going to come down? Because PCE is expected to come in up.
So I'll just say, I haven't always been pushing it out. Yeah. Like the SEP in December, I actually pulled it forward a bit because the economy was progressing in a nice way. But what I would say is this: we know housing numbers have not come in as not normalized as fast as others have as well. We know the goods prices in the most recent period have risen a bit, and we're going to have to keep an eye on that. You know, I hear a lot about eggs and the like. And then we also know that service prices have seemed to have leveled off. So one of the questions that I have in my head is, are we seeing a fundamental change from the trends that we had been seeing over the last 2 years? That's not my baseline outlook, but it's a possibility, and it's one of the things that me and my team will be watching closely in the next 6 to 8 weeks.
Well, suppose inflation stays about where it is and remains sticky but doesn't go up. Is the Fed funds rate properly calibrated for that level of inflation?
Everyone I've talked to has given me information to suggest that it is. We will just have to see, with all the other pressures that are going on, whether we have to adjust and adapt based on new realities. So I think it will be an interesting question, the extent to which we do see upward pressure on prices as these tariffs come in, and it depends really on the suite of tariffs that we see. It'll be interesting to see how consumers take this on board. I think it'll be the intersection of multiple factors and forces that will determine really what level of policy we need to be at.
Well, do you think at this point you have a problem with monetary policy transmission in the sense that you've been cutting rates since September, but market rates have basically stayed range-bound and haven't followed you down?
I don't think it's a transmission issue. I actually think it's a collective dynamic issue. As you know, the longer rates are a function of things other than just what we set our policy rate as, and there's been a lot of change in there. To the extent that there's uncertainty has gone up, you might expect rates to be stubborn on the high side. And so I look at it as a much more meta picture and really try to keep in mind that we don't control the whole economy. We control our policy rate, and that's what we have to stay focused on.
Let me go back to the beginning of our conversation and ask if you or the system have heard from the administration besides these tweets or random comments the president makes.
I've not heard anything, and you know, I will just keep reaching out, doing my job the way I have, and hopefully we will get to a place where the economy is stabilized and both of our mandates are at target.
Well, you and your colleagues talk a lot about the Fed having no role in fiscal policy. Do you think the administration should have any role in monetary policy?
Well, there's an opinion and then there's role. To me, I would say we are going to make our decision based on the task that we have at hand. We have the FOMC, we have 19 members, we have the Federal Reserve Act, which guides us in terms of doing that. And as long as that's the law of the land, that's what I'm going to focus on doing.
Do you find any issue with the Fed's credibility from all this outside chirping at you?
So I'll just say, from the time I've been in this job, folks have had comments on what the Fed should do. So that by in and of itself has not really been a factor. I do think that we have a lot of credibility, and I talk to lots of folks at almost at the end of almost every meeting. I get thanked for what we're doing as a collective, and to me, that's the true measure. When folks that are out there in the economy doing real things talk to me and provide feedback, the feedback has been appreciation about how we've approached the job and a desire for us to keep doing it.
One last question for our friends on the money market desks around Wall Street. You're cutting down on QT to $5 billion a month for treasuries. Do you anticipate ramping that up again, or is this basically it until you decide to stop?
So my preference would be to stay at this rate for a while until we stop. As you know, and as your friends on the desk know, it's not clear exactly what the threshold level of reserves is, at which point money markets might start to function less smoothly. I don't want to get to that level. We're closer to it now than we were a year ago. So for me, slowing down to make sure we don't go too far is fully appropriate.
Would you ever sell mortgages?
I would think about it. You know, the committee definitely has as a goal moving out of the mortgage-backed security space into treasuries. But now we just have to make sure that if we're going to go that route, and I'd say we've not had any conversations on that, we do it in a way that doesn't disrupt either the mortgage market or money markets more broadly.
All right. Well, thank you very much, Raphael, for joining us today. Raphael Bostic, the president of the Federal Reserve Bank of Atlanta. We'll send it back to you.
All right, we're going to take it. Thank you so much. Of course, our Michael McKee there in Atlanta, talking with the Atlanta Fed President, Raphael Bostic. Hey, everybody. Very good afternoon. Welcome to Bloomberg Business Week. Carol Master, Tim Stanovic. We are live on radio, TV, YouTube, and Bloomberg Originals. It is Monday, March 24th. We're going to talk a little bit more about that interview with Mike in just a moment. Yeah, some headlines coming from that interview. I'm not going to go through all of them because I want to save some for Mike, but he was at 2 rate cuts this year. Now he only sees 1. He says the appropriate path for policy has to be pushed back. The question, too, about inflation, Carol, doesn't see getting back to 2% inflation until early 2027. Yeah. And he had some thoughts on tariffs, too, which we should point out is going to be kind of a big focal point for us in the next 60 minutes. Having said that, we do see some dip buyers, let me say it, dip buyers, can we say it, finally coming back into the market? I think so. Look at that. I mean, we're not at our best session levels of the day, but we've been pretty much here all day. Yeah, I saw all of the Mag 7 were certainly higher in today's session. So those names in particular, we do see investors picking up on hopes of more targeted U.S. tariffs. That word targeted is very key, and that's where we're going to begin on this Monday. We'll get into that in just a moment. We're also going to talk, as we said, talk a little bit with Mike about what he thought was most significant from that conversation with Atlanta Fed President Raphael Bostic, and we got more coming up. Yeah, also related to billion-dollar levies on Chinese ships that risk a trade apocalypse, Carol, and we got the COO of Crystal Intelligence on illicit financial flows that are potentially happening in crypto. Yeah, looking forward to all of that. All right, guys, let's get, and gals, let's get you going on this Monday. Let's get a check on the trade and some of your top business stories. Here is Charlie Pellet.
Hi, thank you very much. And here's what's going on. We're holding close to session highs right now. S&P 500 index up 1.5%, up 85.57.53. Where we stand now, we've got the Dow up 471, up 1.1%. The NASDAQ Composite Index up 355, up now by 2%. Your 10-year, 4.32% with a 2-year, 4.02%. Spot gold now lower by 0.5%, 3,007. West Texas Intermediate crude up 1%, 68.98 a barrel, and Bitcoin up 3.9%, 88,440 on Bitcoin. Stocks are rallying. Traders snapping up, beating down tech shares. Signs that tariffs will be more targeted than anticipated. Reduce the appetite for safety. Other news: DNA tester 23andMe Holding has filed for bankruptcy after it was unable to find a buyer to rescue it from insolvency proceedings, and the board of directors rejected a buyout offer from co-founder Ann Wojcicki. Right now, 23andMe down 58%. Recapping, S&P higher by 83, up by 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City on this Monday. And check your calendars, mark your calendars. We're just about 1 week away from what President Trump calls a Liberation Day tariff announcement, unveiling so-called reciprocal tariffs he sees as retribution for tariffs and other barriers from other countries. This is including some of those longtime U.S. allies. Yeah, well, the announcement would remain a very significant expansion of U.S. tariffs. It is shaping up as more focused than the sprawling, fully global effort that Trump has otherwise mused about. This is according to people familiar with the matter. Meantime, just about 90 minutes or so ago at a White House cabinet meeting, President Trump also says he will be announcing tariffs on cars very shortly and on pharmaceuticals at some point in the not too distant future. Those time parameters were his words directly. Let's get more on the president's plans. We head to our Bloomberg News Washington, D.C. bureau and to Bloomberg News senior White House correspondent Josh Wingrove. Josh, thank you for being with us. We know it's super busy just trying to keep track of all of the tariff news. President Trump talks about Liberation Day. What exactly does he mean? Liberation from what?
He thinks the U.S. is being ripped off and that the tariffs put in U.S. exports by other countries exceed those, the ones that are in place for the U.S. for those countries to sell here. And in a lot of cases, he's right. There is an imbalance of export or tariff levels, but, a lot of independent economists would say they're just simply a function of being the world's biggest economy, a consumer-driven economy. So that's why you don't have a lot of those mainstream sort of economists on board with this. But the whole question has been, what is he going to do? And so if you're having trouble tracking the ball on this one, I hear you. Join the club. The story as of a couple days ago that you alluded to, that story is that we think that the plan coming on April 2nd, as of now, is taking shape as a narrower plan than he's mused about in the past, chiefly because he's long since sort of moved off the plan for a global tariff, and now we'll do these reciprocal tariffs, but not necessarily on every country, and that the plan as of now does not firmly include, as we reported a couple days ago, those sectoral tariffs. Now, as you note, we're told today a couple of things. A White House official telling us today that sectoral tariffs remain on the table, and Trump, of course, himself alluding to a couple of them, autos and pharmaceuticals, not really saying the time frame, and he's kind of been conflating autos and reciprocals as well. So these are a lot of tea leaves to read. Tariffs are coming. The exact sequencing, the scale of them, and on what day and whether they're broken into batches remains unclear, but the White House is obviously grappling with how wide to go. There are internal discussions around that. CEA Chair Steve Myron telling Saleha Mohsen on Bloomberg Television in the last hour that those discussions are ongoing, so it's all TBD.
Well, we know it's all TBD, and we know that, Liberation Day, as the president calls it, is just about a little over a week out at this point. But what, Josh, do we know about his thinking and why maybe he's making this more targeted push than he previously announced?
The implication is, and we don't know for sure, but markets have been reacting poorly to not only the tariff threat and the specter of even more tariffs, but the uncertainty around it, the whipsaw effect, right? He imposed, for instance, those tariffs on Canada and Mexico, then clawed them heavily back, temporarily, I'd add, a couple of days later. What happens to those remains very much in the air. That's the third leg of the stool, those fentanyl-related tariffs. Remember, of course, he already has tariffs in place on China, that 20% rate. Whether that's adjusted or added to by the sort of reciprocal rate that presumably will include China to some extent, we don't know. But right now, Trump himself is an avowed believer of tariffs. Markets have been sort of betting that he would use it more as a negotiating tool than a firm policy outcome. I think it's pretty clear that Donald Trump wants tariffs a big part of the equation, in part because they want to book the revenue from it as they have these talks on Capitol Hill towards a reconciliation package to extend those Trump tax cuts and enact other tax cuts that he wants. So Trump wants to shift the revenue base partially to tariffs. He thinks that sounds better. He thinks he can sell it better. He thinks it prevents sort of industries from moving away and can help rekindle things like the auto sector and steel industry. The industry groups themselves are just much, much more mixed, very nervous about this. Remember, of course, many American manufacturers, for instance, rely on imported materials as part of their own supply chain, so they'll be hit by this as well if these start going pretty widespread. And of course, the one thing we don't know is we just don't know what the number is going to be, right? Like, right. If he comes out and says 5% or 10%, versus a 25 on a bunch of countries, right? That's going to be such a big difference. We just have no indication right now what that sort of reciprocal number will be, but he's talked about sort of bigger numbers when he has mused about it. For instance, he's talked about a 20% VAT tax in Europe that he's going to count as a tariff. Well, if he counts that dollar for dollar, and we start looking at that 25% or something like that in Europe, that's a big number, but we just simply don't know.
I mean, will we ever know the math, Josh? And the only reason I ask is, as you note in your article, what the president does around tariffs, in particular, and policy in general, can be so fluid. So, will we ever really know the math about tariffs versus tax revenue? I mean, obviously, tax revenue would be something passed through Congress, and there'll be rules and stuff. But when it comes to tariffs, I mean, he could impose more, pull back. It's hard, right?
Totally, and they're making these numbers up essentially, right? Like they're counting things that are tariffs as well as non-tariff barriers. So there's an eye of the beholder factor to this. Whatever Trump decides to count in his math, they're going to count. So I think that's important to sort of keep in mind. He's also made clear that he can roll these things back. So we saw that twice now with the Mexicans and Canadians. Once a 1-month deferral, and then another one a sort of clawback for a month. And so there's also the potential that some of these things could be enacted or announced on the 2nd, maybe enacted immediately and then rolled back potentially if other countries respond with lowering tariffs of their own. Or we could have an announcement where they're announced but not immediately implemented, and then people can negotiate, presumably, in that interim period. It's just we don't know. But that long lag time factor, we have been there before with steel and aluminum, and the end result is they went in as scheduled, no one got an exemption. So people should not hold their breath necessarily that a long implementation means that there's a window for some grand bargain.
Are there certain geographic regions that are more likely to be rolled back or could be more temporary? I mean, Mexico and Canada, the off-ramp, Josh, for this is related to fentanyl. The other tariffs that the president has announced don't necessarily have those off-ramps.
Yeah, I think he wants countries to announce a lowering of their own tariffs, and we'll see whether they do that. Mexico has taken a much more sort of muted approach in their negotiations with that. There's been sort of positive signs that the administration likes that. We've got a new prime minister in Canada who, of course, yesterday called a general election that could lead to yet another new prime minister in Canada in a month's time. So I think that, TBD on that one. Whether the Europeans announce some sort of tariff reduction deal in the EU, I think really remains the case. He keeps talking about the EU, but the countries that are really sort of on him are countries that trade a lot with the U.S., that have goods deficits in trade, or that the U.S. has a trade deficit of goods. That's an important one because he doesn't tend to count services trade. It's only goods trade typically that he counts. And so by definition, if you're hitting the people that you have big trade relationships with, you're hitting the countries that you tend to be on better terms with usually. Of course, there's big exceptions to that, chiefly China. But that's what's sort of rattling things right now is the ones that seem to be in the line of fire.
Right.
They include many allies like Canada, like the EU, like the Japanese, like the South Koreans.
Josh, one last question, and just about 30 seconds here, but the White House has argued that tariffs will make the U.S. more competitive, attract foreign investment. We've seen some announcements from global companies around that, pledges of money to be spent in the U.S. Pledges mean exactly what? It's promises, but not necessarily reality. I mean, does tariffs lead to more investment into a country, just quickly?
So far, there have been announcements of investment that you could link to the threat of tariffs. Whether those investments materialize remains to be seen. And of course, the sort of other side of that coin also remains to be seen. In other words, companies might announce they're coming, but other ones might not be able to survive the tariffs, and they have to shut up shop.
All right, good stuff. Obviously, one of our big stories, if not our big story, certainly the markets are watching today. Josh, thank you so much. Josh Wingrove, he is senior White House correspondent, Bloomberg News there in our D.C. bureau. All right, let's get to some more of how these targeted or expected more targeted tariffs are impacting today's U.S. trade, and that's where we go. We have seen stocks rally, traders snapping up some of those beaten down tech shares, showing a willingness to take on a bit more risk today. Although, Tim, I should point out that we do see U.S. stocks certainly off their best levels of the session.
Yeah, but still a rally really across the board when it comes to the equity trade today. The Dow up more than 1%, the S&P 500 still up 1.4%, the NASDAQ composite up 1.9%. I pity anyone who's looking for decliners today. That's me because I'm going overseas to find those decliners. Hey, it happens. Hey, with more on the trade, with us in the studio here is Bloomberg News Equities America's team leader, Eric Weiner. Eric, bounce back, dip buying, technical levels hit, fundamentals perhaps changing. Take us inside today's trade.
Well, today's trade really is about, obviously, the peeling back. What Josh was just talking about was sort of the peeling back of certainty on, all full steam ahead tariffs. And if you look at what's moving, it's the big tech stocks that have been moving things all along. So looking at where traders see this, if you were to take a look at the Mag 7, you would see that all of them, except for I believe Meta, are underperforming the overall market. Take Tesla out because that's a whole different story. But like Nvidia, Amazon, Apple, they're all underperforming. So if you believe that there will be growth, which was the fear, if you believe that there will be growth, these things are on sale. And if you think that they're going to outperform ultimately the market, say at the end of the year, now would be the time to buy. So that's kind of they're on sale. They're cheap.
Get your stocks. Get your stocks.
2 for 1.
I'm not saying. I'm just saying. Get your stocks.
Buy one, get one.
We've all been there. And so you can't turn it down.
Well, but just to play off of that, as Josh said, I mean, these are fluid situations in terms of tariffs out of the White House. So the tone tomorrow or on April 2nd could be something very different.
Well, yes. And that is something that we're hearing all the time, which is what traders really want to see is certainty. And I don't know that this administration really does certainty. So part of this whole thing is trying to divine what they mean. And the real fear was just sort of a blanket, we're not even going to look at this, throw out tariffs. And if you looked at like the rush of enthusiasm after Trump was elected, the idea really was that he wasn't going to do anything to scare the market that much. Then he proceeded to scare the market, and the market reacted. This is the kind of thing that they more expected. However, whether this sticks or not will have a lot to do with what we can see through when we get to April 2nd. And April 2nd may not be the deadline either, because we keep moving all over the place.
What are the implications of that, of moving all over the place, of not having certainty here, of sort of getting this idea that, okay, well, Trump announces something on April 2nd, but then there's this period of implementation time where, again, things could change.
Well, and it's also the reciprocals. So that's a lot of what people are afraid of, which is this idea of he put something on, the other country, say China, put something on, and now what every trader said to us before this all got underway was what we don't want is the tit-for-tat tariffs that we got last time. And if we start going back in that sort of tennis match, that is where things get scary, because you cannot predict what the company's earnings are going to be. You have to wait. So you'll start sitting here waiting for the outlooks for some of these key companies as earnings season approaches and they start saying, actually, our revenues are, less than we thought, or
look at the airlines, right? Look at a lot of consumer-facing companies.
Yeah, any number. Well, so travel.
Right.
If you look at the number of people who aren't going to be coming into the United States because of things.
Right.
If you look at the companies that require consumers to continue spending, you look at companies that do well overseas. These are all places that are at risk.
In terms of the trade today, I always like conviction, like volume, in the folks who are out there buying. Do we know, is it retail? We've talked about the retail crowd being very strong. Is it institutional buying? Are there strong flows? What are we seeing in terms of conviction in today's trade?
Not a ton of conviction.
Okay.
Not a ton of conviction. I mean, there is a lot of retail buying, but there's also, you have to look at, like, if you're a portfolio manager, now would be the time to re-up your allocations, because if you have to have, like, say, 30% in tech, well, today would be the day to, today would be the day to kind of get in there. On Friday, there was no conviction. And what we've been seeing is days where, like, the market goes up a tremendous amount, but the overall tenor is most stocks down. Today, we're seeing most stocks up.
Right.
And like the
that's
equal
good,
weight,
right?
that's good. The
Right.
equal weight S&P is doing well. They turned positive for the year. So there is some bullishness, but it's not like this overwhelming whoosh up.
So what happens come earnings in a couple of weeks when we start to hear from the banks?
Ooh. Well, the banks probably aren't going to be the place you're going to hear it. It's going to be the consumer companies.
But we could, Bank of America, for example, has this great view on the consumer. I always look forward to that one because they know what people are doing with their debit cards.
They're going to, right. It'll be, with the banks, it'll be the information inside the reports of where the money's coming from and everything like that. But banks are doing pretty well. When we start hearing from consumer stocks and the tech stocks, that's going to be where we're starting to be judging growth. The whole market fear has flipped. The idea of inflation driving this thing is over. It's now growth fears. So to the extent that inflation points to a slowing down in consumer spending, a slowing down in procurement, a slowing down in trade around, in connecting different parts of the economy, those companies are going to do poorly, but then the overall market is going to start to slump if that's the case, because the question will be, do we get growth in the second half of the year, which is what's being anticipated right now, and that'll be taken off the table.
Well, and that's something we're going to talk about with our Mike McKee, who's coming up next, who just talked with Raphael Bostic, who we know that Atlanta GDP now forecast has come down dramatically. We know it can move around a lot, but it definitely caught our attention. Eric, thank you so much.
Thanks for having me.
So appreciate it. Eric Weiner, Bloomberg News Equities America's team leader, joining us here in studio. Coming up next, we talk a little bit more about what Raphael Bostic had to say on growth, on inflation, on tariffs, on monetary policy. This is Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We're off session highs, but it is a risk-on Monday with the Dow, the S&P, and NASDAQ all advancing. S&P right now up 79, up 1.4%. Stocks are rallying. Traders snapping up, beating down tech shares. The Dow up 419, up 1%. NASDAQ up by 2%. NASDAQ 100 index up 1.9%. And the Russell 2000 index of small cap shares also higher by 1.9%. 10-year at 4.33%, the 2-year 4.03%. Gold now down 0.6%, still above 3,004. And West Texas Intermediate crude up 1%, 69 even a barrel. Bitcoin now up 3.7%, 88,308 on Bitcoin. United Airlines will begin charging customers more to access its airport lounges to help combat a rise in overcrowding since the pandemic. The carrier says individual United Club memberships will now cost $750. Previously, United Club annual fees peaked at $650. Among airline names, they are pushing higher right now. UAL, parent of United, up 5.4%. American up 2.4%. Delta up now by 3.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pallett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Hard to believe, but 2 Fed decisions on the books already here in 2025. The next one, of course, comes in May. We're already counting down. Tariffs, inflation, reduced growth estimates, all were talked about last week by Fed Chair Jay Powell at that latest FOMC decision. Today, Bloomberg News international economics and policy correspondent Michael McKee caught up, as you know, with Atlanta Fed President Raphael Bostic. We just heard the conversation. He is a non-voting member this year. And of course, the two talked about the inflation outlook.
My projection of where inflation is going to go this year is pretty much sideways, and we won't get back to a more neutral level of inflation, our 2% target. I don't project until sometime early in 2027. But it is very much hearing people, take in the latest news, figure out what that means for them, and then I will respond to that in terms of how I think about the economy's trajectory and policy.
Well, there you have it. Bloomberg's Mike McKee with Atlanta Fed President Raphael Bostic. Mike joins us now from Atlanta. Mike, your conversation comes just after last week's FOMC meeting. I do want to start with that inflation outlook and getting that 2% target sometime in early 2027. How does that compare to how other members of the Federal Reserve are viewing the path of inflation?
Well, basically, most members have pushed out their forecast for hitting the 2% target, and that's what the median shows in the Summary of Economic Projections, 2027. Not long ago, it was 2026, and there was a time when they were predicting it would happen this year. The problem is there are some aspects of inflation that are sticky that they haven't been able to bring down, in particular housing, and that's something that President Bostic mentioned. And they're now trying to deal with what will be the impact of tariffs going forward. Bostic says that the companies he's talking to all say they're going to pass along the cost of tariffs to consumers. And so that should push prices up. But does it push them up just once, or is it an ongoing thing? That's what the Fed doesn't know, so it's hard to make policy at this point.
Absolutely, and it makes complete sense. What kind of struck you, or what was it that you most wanted to know from the Atlanta Fed President Bostic in your conversation, especially just coming off of last week's Fed meeting?
Well, I think the interesting note was that he conceded he was one of the people who now thinks there'll only be one rate cut this year. He had suggested that it should be 2 because he sees the economy slowing down. The open question is, does it slow down so much that you don't cut rates at all, or you have to cut rates a lot more? That's what they don't know at this point. And basically, President Bostic said, we can't really say what policy is going to be because we don't know what the fiscal policy is going to be at this point.
Well, what happens if this is something we were just talking about with Josh Wingrove and then Eric Weiner too. The challenge that I think investors have right now, Mike, is maybe even April 2nd, we won't understand tariff policy, for example. How does that uncertainty weigh on what the Fed is trying to do?
Well, it weighs on their ability to make decisions. And Mr. Bostic did say he thought it would be late spring or summer before we had a fairly clear idea of what the impacts are going to be, and the Fed would be able to make decisions, which would essentially rule out a May move, perhaps sometime in June or July. But at this point, they have no clear guidance on what's going to happen. If you're looking at Fed funds futures, you're not getting much information.
Okay, well, maybe they don't know what's going to happen in the coming months, but one thing that Bostic told you that he's already hearing about is labor shortages when it comes to housing construction. What did we learn there?
Well, that's the other side of this Trump policy outlook that we don't really quite know yet either. So far, what we've seen is a big drop in border crossings, and that has cut into the availability of labor. Mr. Bostic said that at this point, he is hearing talk of shortages of construction workers. But what happens when they start deporting people? How many can they deport, and what kind of impact is that going to have on the labor force? Overall, this could lead to problems, and part of it is that there will be a mismatch, because the people that we're losing are the people who are the lower paid manual labor type of workers, and if they aren't replaced, it's not like the people who are college graduates or computer programmers are going to go start picking strawberries. So it is an open question as to what happens with that.
Hey, Mike, how are you continuing to kind of pull in all this information about what we might get from the president on tariffs? We just talked about April 2nd being this Liberation Day. Those are the words of the president, you know, these so-called reciprocal tariffs. He also earlier at a White House cabinet meeting said he would be announcing tariffs on cars very shortly and on pharmaceuticals at some point. There are certain times we hear things when it comes to tariffs, especially on something like cars, that we kind of catch our attention because we know this will certainly drive up the cost for American consumers. How are you as an economist kind of thinking about these and what it potentially means for the U.S. economy in terms of growth and making the Fed's job maybe even trickier?
Well, you can only really think in generalities because we don't have details, and the tariff situation is extremely complicated. For example, cars, there is a lot of cross-border activity in terms of car parts being manufactured. They go back and forth across the border, then they get put into a car that maybe is made in Canada or Mexico and shipped back into the United States. Are you going to tariff every time it goes across? Are you going to impose one tariff? Those would be two very different positions. And if you're going to put on tariffs on countries sort of on a reciprocal basis, does that mean you're going to lower tariffs for countries where we already have, like for sugar and some other items? Are you going to lower our tariffs to match theirs? All this is hard to know.
Yeah, exactly. Mike, thank you so much. So appreciate it. And on tariffs and other direction from the White House, let's actually head to the White House and to President Trump there with the governor of Louisiana, Jeff Landry, and also House Speaker Mike Johnson and others. Let's listen in.
And former Ambassador Sung Kim, thank you very much. Great honor to have all of you. Also, and these names are much less difficult for me, but I think we got them right. But this one we will definitely get right. Mike Johnson, our great speaker, and he's been doing a real job. Right, Mike? It's an easy job, isn't it? House Majority Leader Steve Scalise. Steve, doing all right, Steve, I'll tell you. He went through a lot, and he's stronger than ever. Louisiana Speaker Philip Duvalier. Thank you very much. Thank you very much. Senate President Cameron Henry, State Representative Ken Brass, State Senator Ennie Lambert, and Ascension Parish President Clint Coint-Ment. Thank you all very much. Thank you very much. Great honor. Great to have you with us. Today we're delighted to report that Hyundai is announcing a major $5.8 billion investment in American manufacturing. In particular, Hyundai will be building a brand new steel plant in Louisiana, which will produce more than 2.7 million metric tons of steel a year, creating more than 1,400 jobs for American steelworkers. And then there'll be major expansion after that. This will be Hyundai's first ever steel mill in the United States, one of the largest companies in the world, by the way, supplying steel for its auto parts and auto plants in Alabama and Georgia, which will soon produce more than 1 million American-made cars every single year. The cars are coming into this country at levels never seen before. Get ready. This investment is a clear demonstration that tariffs very strongly work, and I hope other things also, but the tariffs are bringing them in at levels that have not been witnessed. Hyundai will be producing steel in America and making its cars in America, and as a result, they'll not have to pay any tariffs. You know, there are no tariffs if you make your product in America, so it's something that's why so many people are coming. As you know, we have from Taiwan, the biggest chip manufacturer in the world, is coming in with $200 billion, and we have a lot of people coming and plants coming and companies coming that never would have been here, never would have even thought about it. The new steel plant in Louisiana is part of an even larger $21 billion investment Hyundai will be making in the United States over the next couple of years. The company will also be massively increasing its auto manufacturing in Georgia and investing billions of dollars in advanced American technology companies. And what I'd like to do is I'd like to ask the executive chairman to say a few words, and it's a great honor to have Hyundai, a truly great company. Thank you very much. Thank you.
All right, folks, you've been listening to President Trump there at the White House, talking about some investments coming from Hyundai, the executive chair of the automaker there, along with House Speaker Mike Johnson. So, again, we'll continue to monitor in case any news comes out of that event and certainly bring it to you, certainly any market-moving news.
The president did say that Hyundai will be building a brand new steel plant in Louisiana. He said it will be Hyundai's first ever steel mill in the United States. The president also said that Hyundai is announcing a major $5.8 billion in investment manufacturing, and they're going to produce more than 1 million American-made cars. The president saying the investment a clear demonstration that tariffs strongly work.
Right, exactly. And that spend, I'm just getting a little bit more color here, plans to spend about $21 billion in the U.S. through 2028 to increase vehicle production and other projects. So certainly something we'll continue to monitor and see what kind of impact, certainly on the state of Louisiana. We understand the governor is also there at the White House. All right, folks, let's get back to some of the top stories that we are certainly keeping an eye on, and that has to do also with crypto-related crimes. We're living in a crypto world, and that is something we'll talk about in just a moment. In the meantime, let's get back to the markets. We do have a rally underway, but we're definitely off our best levels. And so let's get an update on the trade. Here's Charlie.
All right, thank you very much, Carol and Tim. We've got the Dow, the S&P, NASDAQ solidly in the green. S&P right now up 78, 57.45 where we stand. That is a gain of 1.4%. The Dow up 1%. NASDAQ Composite Index right now up by 1.9%. Russell 2000 Index of small cap shares, that's higher by 2% with a 10-year 4.32%, the 2-year 4.02%. Gold now down $16 the ounce, just above 3,000, 3,005 on the precious metal, down 0.5%. And West Texas Intermediate crude up 1.1%, 69.03 for a barrel of WTI. Bitcoin, meanwhile, ripping higher today, up 3.6%, 88,203 on Bitcoin. A new owner for Dun & Bradstreet. Clear Lake Capital Group has agreed to buy Dun & Bradstreet in a deal that values one of Wall Street's oldest data and analytics providers at $4.1 billion. Bloomberg LP, parent of Bloomberg Radio, does compete with Dun & Bradstreet in providing financial information. DNB shares, they're advancing by 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City here on Business Week. At the beginning of the year, our Bloomberg Opinion team featured a column, and Tim, it noted crypto could go rogue in 2025. Again, it was a bunch of opinion writers weighing in. They noted that when Donald Trump returned to the White House, which of course we know he did, digital currencies may either go mainstream or, Tim, they could be brought down by a cast of villains.
We haven't seen him brought down yet. Our next guest company provides tools for ferreting out crypto-related crimes. Joining us is Maria Haustova, Chief Operating Officer at the blockchain analytics firm Crystal Intelligence. She joins us from Dubai. Maria, good to have you on the program this afternoon. What are you seeing at Crystal Intelligence when it comes to analytics? Who's using the platform, and who, in your view, is using crypto for illicit purposes?
Oh, thank you so much first for having me today. Happy to be here. Our customers are coming from two sides, from financial institutions, and financial institutions care about what kind of assets do they accept as payments, so for compliance teams. And another cohort of our customers are governmental bodies and law enforcement agencies around the world who, of course, fight crime. And when we talk about crime, who uses that, of course, right now, crypto still stays as one of the avenues, it's one of the methods for money launderers to try to hide money, and especially for those type of criminals who are trying to attack or hack particular financial institutions, steal their crypto funds, and then try to go away with them. So yeah, this is the usual case that we're dealing with.
Well, whenever I bring up to crypto folks that, the one criticism of cryptocurrency is that it can be used for illicit purposes, they always push back against me and say, hey, criminals have been using cash since cash was around for money laundering, for illicit purposes. This is no different. It's actually more easy to track crypto because of the blockchain, depending on what we're talking about. We should note, not all crypto is the same. But in your view, how do you take that criticism?
Well, to me, cryptocurrency is transparent and by default, and cash is not so much. So that's why I'm here in this industry. And that's what we've seen for many, many years. Basically, the blockchain technology enables us to track through all the movements, to understand, what actors are involved in the particular transactions. So to me, the transparency that we bring in is just something incomparable to what is possible to achieve through traditional financial methods. And a lot of possibilities. We of course, have to compete with the bad actors because they're also very inventive. We work 24/7 on combating crime, and they work 24/7 trying to outrace us.
Marina, we have definitely talked about and covered a lot here at Bloomberg, crypto crimes or crypto-related crimes. What are the most common types of crypto-related crimes, and who happens to do them the most? I mean, what
And if Carol were to do a crime, what crime would you recommend for Carol to do? I'm just kidding.
Hypothetical. We can take the biggest heist that happened recently. The big cryptocurrency exchange was hacked, and billions were stolen. Big team, and we expect that this team is very much connected with North Korea, has been actually working on this case to make it happen for many, many months until they found the right moment for that. So then what we see is a huge team trying to launder these funds. So they are constantly trying to find locations through which this money can be digital assets, right? Can be moved around so that they don't get frozen by financial institutions following regulations and having an ability, to stop these funds or freeze these funds. So for the last 2 or 3 weeks that we are actually tracking this particular case along with the rest of the industry, it has been a very, very a very dramatic case, taking a lot of resources from us. I don't think it's the last, case of such kind that we're going to see. So a lot of work for us to do, and a lot more actually yet to come. And we don't know yet, what kind of new trends are there in development, because it changes so fast, and the regulations are not so fast to define what actually, where actually everyone should look at this particular moment.
We're going to have to leave it there. Marina Hostova, Chief Operating Officer at the blockchain analytics firm Crystal Intelligence. We're going to send it back to the White House, where the president is taking questions from the press right now. Let's go hear from President Trump. In the meantime, we did hear that the president is set to nominate Monarez for CDC director. This, according to CBS. Let's go back to the White House.
Stronger word, because these guys are professional politicians, and they don't like to hear those words. I refuse to use the word stolen from us, but that's a...
Countries mutually bring down tariffs. Are you seeing that negotiation?
It happened. Well, the European Union lowered their tariffs to 2.5%. We were only at 2.5% for cars, which is very low. And as you probably heard, that European Union lowered their number from much higher than that, many, many times higher. Surprised to 2.5%. So that was good. But I don't know that I expect that. It's up to them. but we have reciprocal tariffs.
Mr. President, your reaction to the story in The Atlantic that said that some of your top cabinet officials and aides had been discussing very sensitive material through Signal and included an Atlantic reporter for that. What is your response to that?
I don't know anything about it. I'm not a big fan of The Atlantic. To me, it's a magazine that's going out of business. I think it's not much of a magazine, but I know nothing about it. You're saying that they had what?
They were using Signal to coordinate on sensitive materials and
having to do with what? Having to do with what? What were they talking about?
With the Houthis.
The Houthis? You mean the attack on the Houthis? Well, it couldn't have been very effective because the attack was very effective. I can tell you that. I don't know anything about it. You're telling me about it for the first time. Anybody else?
This announcement on Hyundai, is this a blueprint for you for other automakers to come to the United States to do what Hyundai was doing and investing so much in Louisiana and creating these new jobs?
Absolutely. That's a nice question from you. That's a shocking question, how nice it is, huh? That's okay. That's a question that's a good question, actually. Yeah, sure. Hyundai's a great company. We have other great companies coming in, and we have some that are going to be staying here and very much expanding. And we have tremendous interest in every business. I can't just say automobiles, but automobiles is a big one. And yeah, this is the beginning of a lot of things happening. We've had, as you know, Apple's announced a $500 billion investment, and other companies have announced 250, 300 billion. But we're well into the $3 and $4 trillion mark, which has never happened to our country before. What it really means is jobs. All we care about is jobs, right? We care about quality and quality of life and safety and security, but we care about jobs. And they're going to have we have a lot of people coming in.
Governor Landry, if I may, Governor Landry, I would love to ask Governor Landry a question, if you don't mind. How did you convince Hyundai to come to your great state? How did you convince them to come to Louisiana?
It was easy. I told them we were going to have a great president this year, right? Look, again, I think that this is Americans seeing the America First policy in action, right? It's not just promises, it's about action. And not only and I appreciate their patience, because all last year, many of these legislators, the Speaker and the Senate President, we worked on making Louisiana as friendly for business as the president is making America. We worked on public safety. We worked on educational reform, which the president's been working on. We worked on tax reform, historic tax reform. And what I can tell you is, to echo what the president said, in Louisiana right now, I believe before the summer's over, we'll have $50 billion worth of construction projects going on in Louisiana. That is a record, Mr. President. It has never happened under any other president, under any other administration. And I can only look at the leadership that he has brought, not only to the White House, but to the world as well. And so to have these executives come here and say, hey, we want to invest in America, because for decades now, what Americans have seen is jobs being offshored rather than onshored. And today's announcement is exactly that. This is a message for all America that this president and their governors out there care about the American worker.
Mr. President, on your Venezuela tariffs, and I have to tell you that if you have any trouble getting permits, which you won't, come see me. I'll get them for you immediately. All right? But you're not going to have any trouble. You know, we had, when I first got involved in this world of politics, when I went down to Louisiana, you know, the two big LNG plants, and they were stuck for 14 years. They tried to get permits, and these were $12 billion and I think $15 billion plants. And they were working on it for 14 years in one case, I think 13 or 14 in the other. And I was able to get them in less than a week. And they were shocked. And probably some consultant got a lot of money for doing it, but nobody spoke to me about it, other than this gentleman at the time. He mentioned it, and he did. They were in very much different positions, but they wanted to see if we could break the logjam, and I got it done. In one case, I actually got it done in one day, and the other case, I didn't do as well. It took a full week. And they built, and they're up, and they're very successful now. That was a long time ago, but we got it done immediately. You'll have no trouble getting your permits, I guarantee. These people you're dealing with are top of the line, okay? But just in case, call me.
On the Venezuela tariffs that you announced earlier today, sir,
yes.
You said it's 25% for any country that does business
That's right.
with Venezuela.
If they buy their oil from Venezuela, they have to pay a 25% tariff to do business with the United States.
Is that on top of existing tariffs? So, for example, China buys
yes,
a lot of
that
oil.
would be on top of it for existing.
45% 25%
That would
tariff
mean,
on China
yep,
next week?
that's on top of existing tariffs, yes.
And so also next week, April 2nd, as you said, Liberation Day, is that going to be sector tariffs as well as reciprocal tariffs?
It's going to be everything, yeah. It's going to be everything, but not all tariffs are included that day. For instance, we'll do some, as you know, we have already done steel and aluminum, and that's at a 25% level. And we are going to be doing automobiles, which you've known about for a long time. We'll be announcing that fairly soon, over the next few days probably. And then April 2nd comes, that'll be reciprocal tariffs. But we may take less than what they're charging because they've charged us so much, I don't think they could take it. In other words, they've charged us so much that I'm embarrassed to charge them what they've charged us, but it'll be substantial. And you'll be hearing about that on April 2nd. And it will be Liberation Day because we'll be taking in large amounts of money for our country, and that's lower taxes and all of the things that are good, and jobs, a lot of jobs.
And what's your message to the big corporate clients of the big law firms that you've targeted with your executive orders? Do you want those big corporate clients to find new lawyers?
I just think that the law firms have to behave themselves, and we've proven that. We have others that want to make a settlement also. They, having to do with the election and other things, they behave very badly, very wrongly, and I appreciate the one, you know, these are the biggest firms, and they all came back realizing that they did wrong, and that's why they're doing this. So I just think they have to behave. We have to straighten out our country. We have to straighten out our elections. Our elections are very dishonest, very corrupt, and we have to straighten it out. And it's so easy to do it. And we should go to paper ballots. We should go to one-day voting. We should go to voter ID. And just one other thing, proof of a thing called citizenship in the United States. Wouldn't that be nice? How simple does that sound? Proof of citizenship, voter ID, one-day voting, and paper ballots. You know, paper ballots are very secure. They have watermark paper. It's very intricate stuff. It's very technologically advanced, even though it's paper, and you'd have no trouble. You wouldn't have dishonest elections, and you'd have them all done by 10 o'clock in the evening. You know, France went to that, and not that I want to copy anybody, but many others have also, and they had 38 million votes, and it was all done at 10 o'clock. They had a winner, they had a loser, that was it. Nobody was complaining, and they had it backed up with paper, and it's so easy to do. The other thing, you'd save about, this would cost you about 8% of what the machines cost. So the paper would be much less expensive. So if you're looking to save some money, that's a good way to save it. So it's a shame that we've gone through it. We've gone through a bad election, really bad election. The election was so bad. And think of it, you wouldn't have had the October 7th disaster with Israel. You wouldn't have had Russia and Ukraine, because that would have never happened. You wouldn't have had inflation. You wouldn't have had the type of withdrawal from Afghanistan that you witnessed, which was probably one of the primary reasons that Russia went into Ukraine. They saw that mess, how badly it was handled. They said, wow, this is a paper tiger that was handled by incompetent people. But that wouldn't have, we would have been out, but we would have kept Bagram, the big air base, which is 1 hour away from China where they make their nuclear weapons. Would have been nice to have it, but now, you know who has it now? China has it. And so an honest election, and we wouldn't have had inflation. You know, you had the record-setting inflation. We wouldn't have had inflation. I want to thank everybody for being here. I want to congratulate Hyundai, a great company, and we will do everything possible. And I will say you picked a fantastic state. You really with tremendous people and tremendous leaders. And Speaker, I want to thank you for doing a great job. You and Steve, thank you very much. Appreciate it, Steve. Thank you very much. Thank you. Thank you, everybody. Thank you.
All right, everybody, you have been listening to President Trump there at the White House, some announcements, but he was there with the governor of Louisiana, Jeff Landry, also the executive chair of Hyundai, talking about some investments in that state when it comes to Hyundai building out its facilities over the next few years, also House Speaker Mike Johnson. But I think what was of import, certainly as he took questions from reporters in the room, Tim, was what he had to say again about really what is our major topic of the day, and that is tariffs.
Yeah, he did say that he may give a lot of countries breaks on tariffs. He'll be announcing additional tariffs over the next few days. He did say lumber, cars, and chips tariffs, though, Carol. are coming.
Exactly. Our team in D.C., they've been monitoring exactly what was coming out of the White House. We'll be announcing, as Tim said, some additional tariffs over the next few days having to do with automobiles, cars, and having also to do a little bit with lumber down the road, lumber and chips. We're going to get all those chip companies coming back. They're already coming back without even doing it, so it's been very good. And he made, some reference again to something we talked about with our Josh Wingrove earlier. April 2nd, a big day when it comes to U.S. tariffs, reciprocal tariffs. So if a country has a tariff on a U.S. good, that the U.S. will do a similar tariff back on that country.
I think a big question that investors still have, and we saw actually Ford and GM shares fall a little bit. They're still higher today, but they gave up some of their gains. Is what happens when it comes to automobile tariffs, Carol. He did say he'd probably announce automobile tariffs over the next few days, but you've got to think that the executives at companies that make cars all over the world, American companies that make cars all over the world, are still wondering about what those tariffs will look like.
Yeah, it's a complicated process, a lot of back and forth across borders. One other thing, too, the president saying I may give a lot of countries breaks, but it's reciprocal, but we might be even nicer than that. So again, as we heard from our Josh Wingrove and really all of our team, the devil's in the details once again when it comes to tariffs. So ultimately, we'll have to wait and see what all of that ultimately specifically will be. In the meantime, we're focused on these round of tariffs coming from the Trump administration, but there is another development we wanted to bring to your attention that might happen, and that's one that would impose $1 million levies on Chinese ships docking in the United States, and that too, Tim, possibly could disrupt global trade and affect the overall global shipping industry.
With what you need to know, let's head to our Los Angeles News Bureau and Bloomberg News editor Laura Curtis, who joins us. Laura, what exactly is being proposed here?
Well, this proposal comes from, it's the result of an investigation by the U.S. Trade Representative into some complaints that the Chinese government has been unfairly supporting their shipbuilding industry over the last couple of decades and squeezing out market share from other countries. Now, the U.S. has almost no domestic shipbuilding capacity anymore, at least for commercial fleets. So the proposals themselves the USTR says are aimed at kind of protecting our industry so that it can reemerge. But in order to do that, they're proposing a fee anywhere from $500,000 to $3.5 million per port call. So every time a Chinese-built ship docks in the United States, they would be charged that fee based on a number of different and sort of hard to understand calculations.
All right.
So that's.
Yeah, right. So we're trying to figure out what that means. Laura, what does it mean? I mean, does it mean this could be potentially another additional cost, that either the company that's shipping the goods, the actual shipping company, or the consumers have to pick up? I mean, what do we know about this? Or could we possibly not get as much stuff coming in? And that could certainly impact and have economic impact implications or even inflationary implications.
Certainly that the inflation concern is one that's front and center. We've been trying really hard to get that under control. And these fees would absolutely not help. There's some question around whether they would be shared by the, how would they be divvied up by the ship operators, the owners of the cargo that's coming in, and then ultimately passed on to the consumer. But yeah, absolutely, it would not be a cost savings for the consumer. And that's not really what the administration seems to be concerned about with this one. So, I think I was just in Washington last week, and there's a sense that in the industry that these plans are so disruptive potentially that there's no way they could come true. But it's got a lot of lobby groups in Washington pretty nervous.
Well, China builds a lot of ships. They account for more than half of the world's ship deliveries. This is a great chart that's in your story. China, South Korea, Japan, and then you've got this tiny little sliver of other nations. So is the idea that a shipbuilding industry will come back to life here in the U.S. as a result of these levies? Because that could be, if it does happen, many, many, many years down the line.
Absolutely. Yeah, that's the idea. And it's not just in this proposal. There's actually a bill going through Congress right now that share some DNA with this. But I think, the time frame is certainly one of the things that the USTR is hearing about this week, from industry stakeholders this week. It would take decades, and one component of the proposal requires U.S. goods to be exported on a certain percentage of U.S. flagged, built, and staffed ships over in the next 7 years. So that time frame has people worried because it just doesn't seem possible.
Yeah, I mean, what was the decision by the United States decades ago? I mean, all you have to do is look at the ports, right? Up and down, certainly the East Coast, West Coast, but the East Coast, I think about in particular, I've spent a fair amount of time, and you see our maritime history and past when we used to build tons and tons of ships, and we just don't do that anymore. I mean, what was the decision by the U.S., do we know, to kind of back off? Is it just that China was shipping a lot, they could do it more cheaply, build these massive ships? I just wonder, the idea of kind of bringing that back, as you said, it's not something we can do overnight, but why did we decide to not do it in the first place, or pull back?
Well, our labor here is expensive. We opened up, we're very pro-free trade here over the last few decades, and I think, took the stance that as long as our allies were building ships that we could use to transport, export, import our goods, that it's a good trade. We could build the ships, but they would be expensive, and carriers I've talked to would happily buy them, but it's not cost effective, nor are they available.
I mean, it's pretty remarkable to look at this. Another chart in your story: 0.4% of the ships that are currently on the water. That is the share that were built by U.S. firms. You've got 34% built by China, 31% built by Korea, and 26% built by Japan. I'm having trouble understanding, Laura, whether or not it's realistic that this industry could come back to the U.S.
I mean, I think if you throw enough money at something, it's possible. There's a question around where the money for this will come from. There's a draft executive order floating around Washington, D.C. that I have seen, and it's called Make Shipping Great Again, and it would establish a fund using revenue from tariffs and taxes and fees like these ship fees to offer incentives and tax breaks to companies setting up shipbuilding operations here. But even with that kind of incentive, I think it would take a whole lot and a long time.
Yeah, and I feel like the net from this reporting, it just talks about how disruptive overall this would be to world trade, and talk about kind of putting the brakes on the global economy. Highly recommend you check it out on the Bloomberg and at Bloomberg.com. Laura, thank you so much. Bloomberg News editor Laura Curtis joining us there, out on the West Coast, out there in our LA bureau. For those of you watching on TV, the close is coming your way in just a moment. Tim and I continuing right here on Business Week, also getting into Apollo's Mr. Fix-It, who will now find potentially a home in Washington. All right, that's coming up, folks. This is Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. President Trump just announced another big investment in the U.S.
Hyundai is announcing a major $5.8 billion investment in American manufacturing. In particular, Hyundai will be building a brand new steel plant in Louisiana, which will produce more than 2.7 million metric tons of steel a year, creating more than 1,400 jobs.
The president may be planning to scale back some upcoming tariffs and increase others, as Stacey Lynn reports.
There's a new tariff concept that President Trump floated today on Truth Social. He said countries that buy oil and gas from Venezuela will face a 25% tariff on any goods sent to the U.S. as a payback for the alleged alleged gangs Trump says Venezuela sends here.
The Trump administration has asked the Supreme Court to halt a ruling that ordered the rehiring of thousands of federal workers. There was a hearing today on a judge's order blocking deportations under the Alien Enemies Act. Camilo Montoya Galvez on the Justice Department's argument.
He is essentially arguing to these federal judges that the lower court judge who blocked the president's proclamation is essentially second-guessing the president's authority over national security and immigration policy. He called the order by the lower court judge utterly unprecedented.
A storm system over the weekend sparked wildfires across the southeast. Jim Crisula reports.
Dozens of wildfires burned across the windy, parched southeast. A large fire is burning near popular hiking spots, including the Appalachian Trail in Pickens County, South Carolina.
I go camping a lot, and it kind of makes me think of like my worst nightmare is someone who camps.
Dozens have been evacuated from their homes as several large wildfires burn in Polk County, North Carolina, south of Asheville. Jim Crisula, CBS News.
A genetics testing company, 23andMe, has filed for bankruptcy protection. The Attorney General for California is recommending people delete their information. CBS's Nancy Chen.
Log into your account, go to settings, scroll to 23andMe data, click view, scroll to delete data, and click permanently delete data.
The second lady, Usha Vance, will visit Greenland, and so will President Trump's energy secretary and national security advisor. Greenland's prime minister warned Sunday of American aggression and what he called a mess caused by the upcoming visits. President Trump said today this is not provocation but friendliness. Correspondent Ed O'Keefe.
Given these visits and given the reaction of Greenlanders, it may be that the relationship is becoming more adversarial simply by showing up.
On Wall Street, the Dow currently up 540 points. This is CBS News. Attracting the attention of classic car enthusiast Jay Leno is a unique college degree program. More from correspondent Stephen Kaufman.
McPherson College is the only school offering a bachelor's degree in automotive restoration.
Most of our students have a little bit of experience in the automotive realm, and others who just like cars, they want to do this.
McPherson President Michael Schneider says the Kansas Schools program is broad-based.
A third of our students are working in the industry restoration shop. Lots of our students are managing private collections.
The U.S. is said to be home to 40 million antique vehicles. Stephen Kaufman, CBS News.
Before it was X, there was Twitter with a blue bird as its logo. The bird on the now defunct San Francisco headquarters has now been auctioned off by a company that specializes in collectibles. It fetched $35,000, a little below what it was appraised at. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are just about 55 minutes away from the closing bell on this Monday. We got another leg up in terms of stocks, so we're making our way back towards our best levels of the session. I think on the NASDAQ 100, we're there, so that means more than a 2% gain. We have seen those big tech names, the Magnificent Seven, really putting some upward pressure on the overall equity trade. But, Tim, we're also up about 1.7% on the S&P 500.
Yeah, NASDAQ higher by 2.24% as well. Seeing buy-in across the different indices. Carol, we got a great program coming up over the next couple of hours. The big take today, this is a must-read. Apollo's Mr. Fix-It is now Trump's pick to police Wall Street.
Right, exactly. So it'll be interesting, really a deep dive into who we're talking about. Someone very familiar to President Trump's first term in Washington. We're also going to get into a leadership shuffle over at OpenAI as the company commits to building AGI and explores restructuring as a for-profit public benefit corporation. I mean, the future of this company could look perhaps a little bit different.
And I think that's fair to say. Also, earlier I was saying, what's it like to be a CFO right now in a world where you're really trying to figure out tariffs? We're going to speak to a CEO of the American liquor company Kraft Co. on what exactly tariffs are doing to her business. They make it all, Carol.
Yeah.
They got bourbon, they got whiskey, they got gin, they got vodka, mixers, they got
just
everything.
kidding. Shree's looking at us like you guys are crazy, or I don't know.
I don't know if we have any of their alcohol. Yeah, we do have their
It's
alcohol.
Monday.
We do have their alcohol.
Oh, do we?
We do, yeah.
Oh.
So that's coming for you later.
Okay. All right. Looking forward to that. Let's get an update on the markets because we have seen some more buying coming into the U.S. trade. For that, let's toss things over to, once again, Charlie.
Hi, thank you very much. And here's what's going on. 53 minutes to go ahead of the closing bell. You mentioned the gains for U.S. equities with the Dow, the S&P, NASDAQ, all in the green. I'm looking at the year-to-date column, though, on the Dow. So far this year, up by 0.02%. Today, though, a rally putting us back in the green for the year with the Dow up 568 right now, up 1.4%. The S&P up 96, up 1.7%. NASDAQ up 399, up by 2.2%. But to keep it all in context, year to date, the S&P remains lower by 2%. 10-year 4.32%, the 2-year 4.03%. Spot gold down $14 the ounce, 3,007 now, down 0.5%. And West Texas Intermediate crude up 1.4%, 69.20 a barrel. Bitcoin up 3.9%, 88,398 on Bitcoin. Federal Reserve Bank of Atlanta President Raphael Bostic saying right here on Bloomberg Radio he sees just one interest rate cut as likely this year rather than two, with tariff hikes impeding progress on disinflation. And in a conversation with our Michael McKee carried live on Bloomberg, Bostic also talked about the inflation outlook.
My projection of where inflation is going to go this year is pretty much sideways. And we won't get back to a more neutral level of inflation, our 2% target, I don't project until sometime early in 2027.
Federal Reserve Bank of Atlanta President Raphael Bostic. Tech stocks surging. Tesla, case in point, up now by 10.4%. NVIDIA up 3.6%. Apple up 0.9%. Meta Platforms up 3.6%. Alphabet up by 2.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks, Charlie, for that update. Do appreciate it. Well, it is today's big take. It's also one of the most read stories on the Bloomberg Terminal about the power lawyer, Washington regulator, Wall Street whisperer. We're talking about Jay Clayton. He stepped into the fray when Leon Black's entanglement with Jeffrey Epstein set off a bare-knuckled power struggle atop Apollo. The veteran lawyer was called on to restore peace, mend fractures, and steer the mighty investing house back to normalcy. Now he's got to do it all over again at another prized New York institution because he's in line for one of the hottest seats in American law as the top prosecutor for the Southern District of New York, the de facto sheriff of Wall Street. Ava Benny Morrison and Sri Natarajan write about the man now gearing up to lead the crown jewel of the DOJ. Ava is a Bloomberg News legal reporter, and Sri is a Bloomberg News chief Wall Street correspondent. Ava joins us remotely from New York City. Sri joins us here in the Bloomberg Interactive Broker Studio. Check out their story and more from Bloomberg The Big Take on the Bloomberg Terminal and at Bloomberg.com/Big Take. Ava, I do want to start with you because this is a job that you've written a lot about. It's a job that you follow day to day. It's a tough job, especially in this environment. How would Jay Clayton keep the office intact while also making sure to channel Trump's policy priorities?
That's a good question. It's always been a very tough job, a very high profile one, and certainly a very sought after one. But it's become a little bit more difficult in the past 2 months. This is because the relationship between Washington and the Southern District of New York U.S. Attorney's Office has become increasingly strained. This was over the case against New York City Mayor Eric Adams. We saw Washington direct the office to drop its public corruption case against Mayor Adams, which the then sitting U.S. Attorney Danielle Sassoon refused to do. She resigned instead, and that set off a number of other resignations, and the office essentially refused to do it, and Washington had to step up and do it themselves. So there is some tension there. There has been some turmoil. Morale is pretty low from what we hear. So this is the kind of environment that Jay Clayton's going into. In the next few months. And one of the big questions is, how is he personally going to manage that relationship with Washington, particularly Trump's top DOJ officials?
Well, Sri, come on in here, because you and Ava both spoke to quite a few people for this story. Mark Rohn of Apollo, John Waldron of Goldman Sachs, Elliot Spitzer, Whitney Tilson, all making appearances in the story. Let's start with Apollo, though, and what he did at Apollo, and sort of whether or not that portends success at SDNY.
Well, it's a good point. Like, when he finished the first Trump term, when he was out of the SEC, Apollo at that time was in a great period of turmoil. If you had to go back to, say, 6 to 9 months before Jay Clayton went in there, first as an lead independent director, and then within 3 weeks was made the chairman of the board, which in itself was a big deal because no major investment firm, at least in what we would traditionally call the big private equity firms, has ever had a non-founder chairman of the firm. Forget non-founder. In this case, this was someone who's non-founder and an outsider, an independent chairman of the firm. And why did they have to do that? Right before then, Leon Black's entanglement with Jeffrey Epstein, the fact that he had paid him $158 million for financial services, had really reverberated through the firm as shock. Investors were on the sidelines. Potential LPs also did not want to give money to the company. And when you look at the stock chart at that time, the 6 to 9 months before Clayton started there, Apollo was either roughly flat or down a couple of percentage points, while everyone else in their peer group was up 20, 30%. So I think it is fair to say that it was a bit of a fork in the road. Succession planning is not easy. We're still in the phase where a lot of these firms are just transitioning from their founder leaders to the next generation. And at that time, with the black mark around Leon Black, it was a real question of what the future holds for Apollo. It needed someone like Jay Clayton, someone who's well-regarded in Washington, someone who's well-regarded across Wall Street. And the fact that he set up his office right next to the CEO, Mark Rowan, who came in as CEO, they worked in concert with each other. They worked really closely, and it seems to have paid off for Apollo.
Well, let me piggyback on that. Ava, let me bring you back in. So what kind of relationship can we maybe assume that Jay Clayton might have with President Trump in his running of the SDNY? And what typically is the president's involvement in the SDNY?
Typically, the president has very minimal involvement in the SDNY. That office has a reputation for fiercely guarding its independence from Washington. It's nicknamed the Sovereign District. It likes to chase after these big, flashy Wall Street cases that Sri and I often write about, without any interference or involvement, or really any guidance from Washington. But the second Trump administration has proven itself to be a little bit different. And I think the actions that we saw play out in the Eric Adams case have shown that Washington wants to keep a close eye on what SDNY is up to. And from our reporting, we've got the sense that Jay Clayton isn't exactly averse to having more of a dialogue with Washington and keeping them in the loop a bit more on the things that SDNY is working on. We think that his relationship with Trump, the two are pretty close. They're golfing buddies. He had quite a bit to do with Trump during the first Trump administration when he was the chair of the SEC, and he was actually a contender for the SDNY role that time around, but that didn't work out. So we imagine, if push comes to shove and things reach a kind of critical point, that Jay might be able to use that relationship that he has with Trump to kind of come out with a solution that's best for the office.
Look, and my running theory is I think President Trump really likes anyone who's really good at golf. And this man here is a single-digit handicapper, so that might explain why they have a reasonably good relationship. But I do want to go back to your question, Carol, about what is the usual relationship between the president and the U.S. attorney at the Southern District of New York. I think it's important to take another step back and realize what is usual is not usual in these times. We are talking about a president who has vowed revenge, who has vowed to use the tools at his disposal to go after his enemies, to go after his political enemies and upend norms. So whatever might have been the precedent, whatever might have been the practice between that office and the White House, that does not hold because it's a very different relationship right now.
Okay, fair enough in terms of who President Trump is and what he does. Who is Jay Clayton, though? And is he someone that Wall Street is telling you, folks who know him, that he's going to follow the rule of law? And would he push back or no?
That's interesting because, again, Sheriff of Wall Street is the title given to the serving U.S. attorney in the Southern District, right? It is known for its independence. And it is known for some of the big cases that it has taken on Wall Street. You go back all the way back to the 1980s junk bond king Michael Milken, to Sam Bankman-Fried and Bill Hwang. This is the office that has gone out and prosecuted all of these people. So it certainly has a big role to play. And Wall Street is certainly an industry that is in its sights more often than not. Still, I think it is fair to say, for better or worse, and this is a criticism Clayton